Good morning, my friends, and welcome to the Breakfast Club. My name is Darren Hancock. I'm your host today, and it's Monday, the 25th of March. And we're looking for some dipping down into the fair value gap that we've got forming there on the NASDAQ on the daily. Now, let me just make sure that we are live, and usually my buddy Christian now. Used to be my buddy Kirk. I haven't seen Kirk in a long time. Kirk, get a hold of us, man. I'm going to keep sending it out there to you. I'm going to keep hoping that you're there, Kirk, and you're going to... What's that said? 5. What? Oh, he flies at 5. Oh, okay. Sorry. My father-in-law's heading out today, so I'm going to make sure he gets on the plane. Okay, we are live, so you guys caught all that. I could have cut that out or something like that, but you got to be live. Lobo del Cash. Hello.
5 o'clock.
Yeah. Lobo, good morning. And Iggy Pip. Hello, hello, hello. Have my coffee and let's get her started. All right. I'm going to kind of give you a quick blow through these assets that I see at the top here. I want to get that done before the New York Open. I'll get back to the NASDAQ shortly. But I welcome you all. I hope you guys had a great weekend. I hope you got to spend lots of time with your family, some friends, share some fellowship, and enjoy your life. The weekends are your own. Enjoy your life. Enjoy your family. Enjoy your living your life. Anyway, I won't get into lectures. S&P 500, what do we got sitting right here? So here's a pullback into this consolidation I see right here. We're already digging into the fair value gap already. So I want to see this pull back into this old high here. The mean threshold of this down close candle, this up close candle on the daily. Look for that, the final level of support there. So this would be just below this level here. You're looking for any breaks in these SIBIs on the upside, and look for it, because as soon as you get a swing below a low and you get a break above this SIBI, sorry, my mouth's not working here, a break above this SIBI, look for some support at that for a continued upside run. But until that, we're still looking at a downward run into this fair value gap today. We may even see a pull all the way into the full close of this on the daily. Same thing with Dow Jones. You see how Dow Jones has hit its high already, whereas ES has not hit its old highs yet, but the Dow Jones has. So Dow Jones, I want to see this one continue through this mean threshold that we talked about, looking for on this one, on ES. Dow Jones has hit that level already, so if this continues to degrade, look for a further run down into these old highs, and then eventually a fill of this fair value gap. Dixie's finally kicking off that mean threshold of that breaker we were talking about, so that's good. We've got some sensitivity off of that. I'd like to see that start to run all the way back through this breaker here. Now we're just going to come back into the top of it, so you expect the price to run down a little further. So those of you who are on your foreign currencies, your Forex markets, look for a little run up further today, at least for the next 60 handles or 60 pips. So yeah, I'm seeing this coming back into this breaker here. If we hit the breaker, the top of the breaker, and get into the mean threshold of that, look for the close of that fair value gap. Well, not fair value, this bullish candle here on Friday. Look for that to refill back down into here. Then we may get further upside, or if we start to degrade through this and we start getting into this little imbalance you see right here, and start to really dig down into this downward candle right here. This would be another breaker, last down close candle here before this run above this old high. We have a swing point. So this looks like a breaker. So we've got overlapping breakers here. So look for the mean threshold to hold price on here. If that gives up, look for the rejection, the price imbalance, not rejection, sorry, the imbalance right here, and then look for this old high, mean threshold. And if they start to give way, then we're definitely coming back down to this lower fair value gap in this range. If you look at the premium and discount, if we blow through the midpoint of this, we're definitely heading for down here, on a close that is. So right now we're putting upward pressure on our foreign currencies. So look for a return back into this breaker right here. We have a swing point, up close candle. We've run below these old lows right here. So look for a run back up into this level. And if we get a body that breaks up through it, comes back, finds some support inside here, look for a further dig up into this breaker. Mean threshold is ideally where you want to run for. And if you are inside this range, start scaling yourself out inside this candle, and then leave a piece on for run for rejection block and a little higher. In case the American dollar does continue to go down further, you'll still have a piece on. If you get through the midpoint of this candle, especially if we get a big bold candle through it and come back, find some support at it, look for a continuation on the upside through this up close candle here, which is also mitigation. We've got this reversal pattern that's formed here on the daily. A body breaks below it. We come back inside it right here. Perfect entry for a short there on Thursday for continuation for a rundown for the same reason I just gave you, all going up here. The same reason on the way down. Find your breaker, high, open, mean threshold. Look for the rejection block. If it takes that out, look for the lows, and you would have got all of those on Thursday and Friday. Euro, similar kind of setup. We finally got some support off that 4-hour inversion. It seems to be a level of support for us. So look for another run back up into this breaker, fair value gap to fill. Well, not fair value gap. It's still forming. It may, if we just come all the way back up here, it's not a fair value gap. It's just a rebalancing this price from this down close candle that happened on Friday. So look for a run back into, we're getting right close to that tip off point here. So you want to see it start to really dig into this candle. It hasn't become a breaker yet. We have not taken out these old lows, so we're just returning to an order block. Look for a fill on this, bodies, and then a further dig back into this limbo between these two fair value gaps. So we'll see how it acts today, but I think you got some more upside in you today. And then we'll see how it acts for Tuesday. Tuesday might set the high of the week and then roll over and come back down. So American dollar might look for the low of the week and then look for a further run up. So here's your big lynch piece right here, whether or not we make our way through the mean threshold of this candle, get up on top of it, and continue to push through for higher prices. Canadian dollar. Let's look at the Canadian dollar. Anybody's trading Canadian dollar. We finally run above these highs here. We created more equal highs, and we have more equal highs over here. So there's a ton of liquidity sitting just up in here. If the American dollar does do its little dip down, we're looking for the Canadian dollar to run back down into this fair value gap. Sorry, not a fair value gap. Rebalance this upward candle here back into the daily fair value gap. Look for a return to the open, and then a touch of this fair value gap here, and then a continuation back up to clear out these highs. If we hold off here and create a fair value gap and pop up above it, then look for a run back down, a bigger dig down into this candle here. Mean threshold. You'd want to see this piece stay open for a breakaway for a further upside. If it that's the way it's going. You're in a consolidation in a premium portion of that range, so you'd want to see it get back to at least into a discount. So pull your fib tool from high to low, look for your 50%, and look for a run back in there and find confluences in your lower time frames as support price for either a continuation to the upside or downside. Ideally, I would be looking for if we take out, as soon as you take out a high, look for a reversal pattern for a run back down into this daily candle in here, in this fair value gap that's going to form tomorrow if we don't get much action out of today. For example, you want to look for this kind of setup. If we get a run above a high like this, look for this. If we get a run above a high, create a fair value gap, drop down below it, come back inside it, all the way up here, you catch these shorts. They're classic reversals. Same with this one right here. You see how this, we have a dip below a low down in here. This little dip, we dip below that low. We see a fair value gap that's formed over here. The body breaks through it. We come back inside it right here, and you get long. And you get long for days. They're classic, people. They're classic setups. If you know how to play them, and then use your fail-safe, the fail-safe that we taught you on the weekend, if you use that, you've got a bomber. You don't really need to do much of anything else. That return right there, and it happens on the minute chart all the time. If you're playing off of a cam model, it happens so many times. It's so many times. Watch our review we did on the weekend, the Breakfast Club morning edition or Sunday edition. On the weekends, I've done 2 of them already, and I've showed you how you can use these in any asset class. We pulled PayPal, Amazon, we pulled some obscure, we even pulled out the Nifty 50, the Indian market, to show you how this works on anything. It's like I've said before, if you have anything that you think runs, you've got the market dialed in and you've got your method, as it was, as you would say. If your method doesn't work on every single time frame, every single asset class, then it's not algorithmic. You're trying to form fit it to whatever asset you're in. And I know it's a bold statement to make, and that's not bragging or anything like that. It's like, if you truly understand the algorithm and you understand that it's running the markets, everything, and again, that's a pretty bold statement to make. It's a pretty big reach for some people. But stick around. You're going to see a level of accuracy that you are going to really question why that's happening. You'll never hear me reference news. You'll never hear me reference what the company board meetings are, fundamentals, or anything like that. It's not to brag, but it's just to show you that once you see the algorithm functioning as it should, or as it does, then you'll start to see these setups that occur regularly, and then you'll learn to a level of trust. Then you'll have yourself an asset, or have yourself an entry, and you'll feel so much more comfortable. The whole psychology you'll finally feel this weight get lifted off your shoulder, and you'll go, holy smokes, it's there, it's visible. You have one of those aha moments. It's like Michael said, the day you discover that the algorithm is truly algorithmically running between PD array to PD array, looking for data points, and as soon as you start to see or recognize what it's reaching for, you go, holy smokes, this is amazing. And you'll see just in here the people that can attest to the level of accuracy you can get on a 1-minute chart. And everything you see on a 1-minute chart, you'll see on a 5, 10, whatever. You can go 2-minute, 2.5-minute chart. I don't care. There's no half-minute charts. But if you get into the 1-second chart, it's the same thing. Same thing. Everything that I'm showing you on here, you can see on a 1-second chart all the way up to a 1-month chart. I know it's a big stretch for those of you who are new here that have been taught so many other more complex things. We're going to really make it simple for you. Well, not simple. You have to have a level of understanding of ICT concepts, basic theories, in order to understand what we're going to be talking about here. But stick around. You'll see. Or not. That's the great thing about choice. Okay, so we've hit the bottom of the breaker. Let's see how we're starting to close through it now on the daily. now we're eating through that, so now we're expecting to see more downside. So that would indicate that we have more upside for American dollar usually, but that's not, New Zealand isn't your bellwether as to whether or not the American dollar is going to do its thing. The American dollar does its thing, and these guys respond. And of the two, New Zealand and Australian dollar, New Zealand is the weakest of the two. It is the sick sister. So we are back into this area here. So if we can start to climb back up, same kind of principle. You notice that they're all, the asset class we've talked about right now, have this opening sitting right in here. This space that needs to be rebalanced back up inside this breaker, and then look for either further continuation. We need to lose the midpoint of this candle, and then you've got this big breaker sitting right here. You got mitigation blocks here, big breaker right there. So I'll run all the way up into the midpoint of this breaker, which was right here. We dipped below it, came back up inside the midpoint, and then continued back down. So if we find support off of this, it'll roll over and continue down on the downside. And then we're looking for a final, you're going to see a big change in here as we start getting closer to April. We're going to see this massive resurgence. Trust me. Look at your seasonal tendencies. Wait. If you're patient enough to wait, you can catch yourself a monstrous run here. Look for the swing points that I've pointed out to you. Here's an example again on a 15-minute chart. Here's where your proof. You have to be able to play this on any asset class, any time frame. So this is a 15-minute chart. We have a run below a low, fair value gap. This is your low right here. We don't take it out here. So we wait for a body to trade above it. That's not traded above it yet. Now all of a sudden it trades above. Then it comes back all the way back and goes doop right inside it. Yes, we cut through candles. And now we're starting to climb back up. Here's your reversal going the other way. Body trades below it. You trade back up into it, and you catch it short back to this one. If you watch my Sunday session, you'll know that we trade from one array to the other array. If we've got a swing point below, run to the swing point above. That's your exits there. Pull your fib tool. Anyway, I'm not going to get back into that. Check out our Sunday session. I'll tell you how to trade from one to the other and how to scale out your profits inside this range. Let's go over here. Let's close that. Close that. See how the Australian dollar has not taken out those lows yet when you compare that to New Zealand dollar? See how they blow right through their lows? Australian dollar is the stronger one of the two. Oh, I had a buy order right there, and it hasn't hit me yet. It literally bounced on my entry. I put this in last night. I was expecting it to come back into this level here. Or was that on the weekend? Yeah, it has not. Look, it just literally came back and tapped me, but did not put me in. It rode on top of my. Oh well, I'll end that one. I was hoping it would just tap in here. I can catch this for a run back up into that area, but it's already on the way back up now. Oh well, sometimes you can be too close. Look for a run back into this order block. Look for 50% of that. See if this hold stays open now. We have just a run down into the rejection block and then a pull back into this candle. Really, you're between the rejection block and that candle's midpoint. If you come back and fill the fair value, this order block here, if you fill it back up to the mean threshold of this candle right here, then you're really stuck between this inversion and that candle's mean threshold. If it starts to eat through it, look for another dig back into this fair value gap up here, and then you want to see a roll over and come back down, because we have a reversal pattern that forms right here. Body breaks down below it right here. We trade back up inside it right here, Stop loss is sitting up here, and then we starting to run back down to rejection block. Pay yourself at the rejection block, pay yourself at the order block, pay yourself at the breaker, whatever your method is for getting out. I'm not going to tell you exactly where you should get out, so you decide. I'll give you multiple methods on the weekend in which to trade the range that you're sitting in a day. If you're collecting that candle is your full day candle back into here, man, you're clipping coupons since Thursday. Japanese yen still hasn't taken out that weekly high. There's a ton of liquidity sitting up there on the weekly basis. Look at that, way back here, here, and now here again. Consolidation, CAM 2 model. If you look at this right here, we have a CAM 1 to the top, run higher. Then we have another pump all the way back down inside a logical level, which is your inversion. Cut through candles, you'll see it further over here. Run all the way back to it, key off of it, which is a CAM 2 model, and run back up above this old high. That right there is your perfect entry for your, you collected that all on Friday, popped up to here, or sorry, Thursday, popped that up, cleaned out Thursday's high, cleaned out Wednesday's high, and your CAM model just kick butt. So again, we're looking for a bigger dig down into here one more time. You want to see this start to run back to this and get through it. If not, if we need to lose 50% of this wick, if we lose 50% of that wick on a close, look for further downside. If we just come back inside it and continue to push higher, look for those big weekly highs to get taken out finally. Oil. We have got an inversion happening here, so I do like this reversal right off of here. Oof, that was such a delicious entry this morning. Wow. Today there was a run up, whatever the high was of the day. Right there with precision was that inversion fill. You see that? Dang. That happened in London. How delicious is that? Wow. Perfect. Perfect entry. And then you look for your setup. So even if you're looking for that on the daily, you come down all the way down into your 1 minute chart, whatever chart you're trading on, you look for the same thing happening down on these lower time frames, and you catch in on them, and then you just move yourself to break even. The moment you break down below a low, move to break even, let it become a stress-free trade, and let her buck. Let her run for the rest of the day. Let her run for the rest of the week if you want. If you understand what it is you're looking for on the higher time frames, what we do down here on the 1 minute time frame, you see up there on the higher time frames happening. I'm telling you, you're gonna collect some pips. You're gonna collect some handles. Gold's in a consolidation right now. We're kind of looking at this level here on Friday, and we're saying if we close below this, that becomes a level of interest, but we're just sitting in here, so I've got nothing for you in gold. Silver's finally hit its rejection block right here. Pay yourself at rejection blocks, people. I'm telling you, because you've got a whole day on Thursday. Tap the rejection block and hammer it away. My buddy Lambo loves rejection blocks. I think we're getting a lot of people here starting to see the value of pay yourself at a rejection block, because you may get denied more often than you think on these little, see this rejection block right here, you don't take out the high, rejection block hits it, and then you deny yourself all of this because you got greedy and you wanted the high and you never got it, and it traded against you, and you were like, well, maybe it's going to take the run up now. Yeah, and then before you know it, you're underwater and you've lost all those profits. Pay yourself at rejection blocks, people. Pay yourself. The distance between there and there can be 100% success versus a lower probability of fully taking that out. I don't know what the stats are, but they're not good, that you're always going to take a high. But if you come up to a rejection block, you hit the rejection block, you get paid 100% of the time that you take your money out. That could be true of any level, I suppose. You always get paid whenever you take money out. Copper, come on, copper. Act in accordance with what I'm expecting now. Copper, we're looking for a break below this low. Actually, we already have it right here. Here's our swing. There's the inversion. Body trades below it, right there. And we don't get a chance to get in it. So if we come back up into this, there's your short. Running for here. These old highs, look for a fill on this fair value gap. If this happens before you take that high, we start taking out lows before it finally comes back up there. Look for the reversal pattern that trades back into this. So that will be your pattern to pattern, reversal to reversal, premium to discount. You hear me say like a rate, I like a rate all the time. That's what you're looking for in copper. And palladium. I got 3 more minutes to blast through this. I don't know how many people are in palladium. I'll skip over that. We'll go into this one. Soybeans. I really have to put those other futures in. Oh no, this is right. I got soybeans, commodities, corn, sugar. I've got live cattle. Swing point, consolidation. Run above, come back in, CAM Model 2. Boom, perfect. CAM Model 2 entry for a long rejection block. Pay yourself at the rejection block. If you get the high, pay yourself. Use your fib tool. All those things I taught you on the weekend. That's soybeans. Corn, look for this gap down here as a retracement. I run back. We're in a consolidation now, so get excited about your consolidations, folks. You can decide if you're going to use the CAM models for consolidation. Oh, let me. I have to give myself a little youthful glow here. Stand by. I don't have my little camera on. Or my. Watch this. I'm going to look 20 years younger. Ping. Don't I look sexy now? Sugar. Got 2 more minutes. Then I'll say hi to everybody. Sugar. I don't see anything in sugar just yet. Nope. I don't see anything in sugar just yet. We're inside this range right now. Inside that range, we're back in towards the midpoint of the larger range we're in, so I don't see anything for that consolidation here in coffee. Look for a CAM model entry when you get out of there. These some awesome little consolidations that are going on. Live cattle. There's some beautiful consolidations happening here. If we end up getting a breakout to the upside or downside, look for a quick return. And I showed you how to trade with the fail-safe this weekend. Use your fail-safe for your CAM models. And yeah, and good luck with that. Coca. It's just one of those steady grinds up. If you can't catch it on the turn, consolidation. Look at this. Consolidation right there. It pops up above it. Right there. Comes back to it on this candle. Tip, taps it, and then away you go. That's a CAM Model 1 entry. And those of you who are into CAM models will see this. Somebody out there might be going, that's bullshit. There's no way you'd see that. Well, if your specialty is CAM models, well, you really like to watch for CAM model entries, and you're waiting on that day for you're trading futures, and you're into coca, and you see that happening, you just had practically zero drawdown, and you're in a massive run up right now. I don't know what they pay for their contracts, but if those ones, coca futures, and you caught that right there off that candle for a run up, you're laughing. Lumber, I don't see a hell of a lot happening in lumber. We've had this gap up now. If you get this return back to this old high right here, but this gap stays open, just a return to this, look for a run back up. We got another consolidation forming here, so 1-to-1. Look for this old high. Again, stop loss has to go down here. Take 50% of that. if you trade below 50%, that would be like a CAM2 model. Anytime you want to trade the mean thresholds of this, usually it wants to come back and balance it, but you could leave these things open for months. For months they can be open for. So, for example, that was in October, unless that's a contract month. Ignore me, it's probably a contract month. That's why you see the big gaps. Anyway, that's that. I hope you got something out of those. Oh, the delicious carrot. Oh, the mascot, the carrot mascot. Do you love it, folks? Do you love the mascot? All right, let's say hi to everybody while we're waiting for the markets to finally do their little thing. Giving us a little push. 43 of you. Welcome, 43 people. Oh, what do we got here? Lobo de Cash, Roberto. Roberto. Good morning. Christian. My friend Christian, how are you, my friend? Fernando. Lewis from South Africa. Good morning. Harry. What is a CAM model, he says. Where can I study it? You can just go onto our channel and you'll find it under the ThetaWaveTrader channel. You'll see it under CAM model 1, 2, 3. It's consolidation attack model. It is an ICT thing. He just hasn't named it. I just named it, but it is ICT. It's not something new I've invented. I just gave it a name because Michael has never given it a name. He just said when you come back to a consolidation, as soon as you touch the high, it's a level of support. The mean threshold, the middle of the consolidation is another level of support. And the CAM3 one, I don't think he's really mentioned it, but I threw it in there as a option when the leg takes out. That level of manipulation that you get below consolidations, there's a manipulation leg first, and then it runs back up, and it can run all the way back down to 50% of that manipulation leg. That's a CAM Model 3. But I threw it in there. Michael can have the credit for it. I don't know if he's ever mentioned, I don't ever remember him mentioning that one, but I don't care. I don't care who takes credit for it. If it pays me and it pays you, then I don't care who invented it. Richelieu, welcome, welcome. Gyung, happy to see you, buddy. Iggy, learned a lot from the Skype chat there, and thank you. You're very welcome, Iggy. Thanks for popping in. Niv Trader, good morning, Darren. I watched the Breakfast Club video. It was great. Thank you. You're welcome. You're welcome. Thomas, my buddy. Thomas, how you doing, my friend? Hope you're doing well. Good morning. Julian, Mr. Dot. I see you, Dot. He makes a statement. Good morning. Have you seen the dollar index? Have I seen the dollar index, you say? Yes, I have seen the dollar index. It's coming right off that mean threshold that we talked about off the breaker last week. Isn't that delicious? Isn't that like right in the mean threshold of the breaker and also the consequent encroachment of the daily fair value gap? Call it magic, call it coincidence, call it fundamentals. I call it deliciousness. Dave Barry, how's my buddy Dave doing? Now there's a guy who's really hitting the books. He's really studying hard. Him and Fernando are starting to really hit the books hard and study this stuff, and they're seeing it. They're picking up these patterns, and you're starting to go, holy smokes, this stuff is a lot more present than I thought. I wonder if there's an algorithm driving this. Or are you still wondering whether or not the news is what's influencing it, or whether there's a boardroom meeting over in Google or Apple, or some analyst told you it was going to go there, so it's going to go there. Okay. Wherever you get your source of information from, I don't care. As long as it's backed up by this, you can believe in all the voodoo witchcraft and all that other predictions all you want. If it works for you, I'm happy for you. Richelieu, you look like an actor from Russia. Alexander Samelenko. He's probably a very handsome, gifted actor. I'm just saying. I'll tell you about my acting career. Oh my goodness. I majored in acting at university. That was my big thing. I have a commercial art degree, but I couldn't sit and draw forever. So I ended up doing this acting. I got into acting at University of Winnipeg. Loved it. Did a couple of commercials. Did some movie stuff. No major roles. You know, you usually see me in the background walking by the camera. I'm the background guy. I did do one called Sex, Lies, and Videotape. No, Sex, Lies, and Murder. Not Videotape. That was with somebody else. If you look at me up on Google, you'll find me under, was it IMBP or something like that? You'll see there's only one movie I actually have credit for. I actually had a speaking part. I played this guy called Jerry Bortoff. It was a guy who had murdered his girlfriend's husband for insurance money, and he planned the murder. So I played the part of Jerry, who's doing time down in Florida. It was in one of those those vignette type shows. Anyway, you'll see. I'm not bullshitting you. I did do acting. I do have an agent, though I haven't been for a long time now. But anyway, yeah. So you're a Russian actor and me. We have something in common. Terry Sullivan. Good morning, Terry. Kitty, good morning. The husband and wife team is hitting it hard today. All right. Doing great. How you doing, Darren? I'm doing great. Thank you, Christian. Harry. Got it. Thanks. Tesla. Good morning. How you doing? Josel. Good morning. How are you doing? Victor. Buenos dias, my friend. Buenos dias. Kenneth. Morning. We got some good people in here. 53 people. So, do you see we got 549 people already? We are barely breaking. We just finally hit 500 last week. And now we're hitting 550. Can you believe it? Man, we're growing. I love it. I love it. There's more people getting the message. There's more people seeing the magic that is what ICT has been teaching. I tell you. It's really quite exciting. It's really, really quite exciting. So we've taken out this old high here. I am looking for a retracement back into this zone. We're in this consolidation. Ideally, what I want to see is this come all the way back down through all of this. This whole week, I want to see it hammer all the way through this breaker right here. At least come back to this breaker. If we get a return to that breaker, I'm happy with that. At least 50% of the range that we're in right now. We have had a reversal pattern. Look for this candle here. That reversal pattern I was just telling you about. So you say, let's say that happens right there. You look for these old highs that get taken out and you look for the reversal pattern. So let's go back through our charts and see if we can't find the reversal pattern right there. So you say, okay, this is it here. And you go, oh, now I'm looking for, we've just taken out that high. I look for that reversal pattern. Look right here. You see, look. Body breaks below it right there. And you go, oh man, can I get back on? Can I get back on? You can't even get back on that one. It was so snapping off of that high. That shows you the reversal. The moment it breaks through this low here with a down close candle, we have a break in market structure to the downside. So if you don't get a chance to get into that, look for a retracement back into a breaker so you can get access to the breaker and a run back down into the lower levels. So if you're anticipating another run back into this range and you can't get in there, look for the breaker. And then when we return back up into the breaker, which would take you a couple of days, return back into the breaker, fair value gap right here. That's your classic 2022 model. Break down, come back up inside, get short there. Look for another reversal pattern here. We broke above an old high. This pattern repeats itself here. We break down below it, come back up inside it right here. Stop loss goes up here. Use your fail safe I taught you on the weekend. And look at this. You just caught yourself a delicious, massive run. You just were patient. Did you wait for just two little trades? Did you wait for two trades? Did you wait for your perfect setup? It's one setup. But did you wait for the perfect time to do it? Or are you impatient and want to be in every single candle that makes a run? Because if you do, hey, we got methods for you. We got to show you how you can get in on lower time frame stuff. And that's a 15-minute chart right there. Now, could we have got in on this on a 1-minute chart? Ooh, let's go see. That was the March 21st at lunchtime. March 21st at lunchtime. We're looking for that setup. March 21st at lunchtime. 1-minute chart. Where am I going here? 1-minute chart. March 21st at lunchtime. March 21st. Oh, look at this one here. Swing above. Body breaks down below it right here. Oh, look at this on a 1-minute chart. Is it possible? Does it work on every time frame? Mm-hmm. Yes, it does. That's when you can prove that you're algorithmic, that your pattern sets up on every time frame, every asset class. Watch what we did on Sunday, and you'll see. We never pulled Bollinger Bands or MACD or RSI or any of that stuff. Never drew a line for a trough. None of that crap. Head and shoulders, bat wing patterns, all a waste of time. Literally showed you on any asset class. I even asked people to ask me, what asset class? Give me any asset and we'll look for your setup. You wait. If that's all you're waiting for is just that setup. If you don't see it today, walk away, go play golf, go spend some time with your kids. Go invest your time in something that enhances the brilliance that is you. Enhance the brilliance that's your kids. Help them grow. Help them become better people in the world and not entitled. There's so many bloody kids out there that feel so entitled. Anyway, I'm going on a rant here. Oh yeah, we're looking for the 12, weren't we? Sorry, 2112. 12 o'clock, was it? 21. Oh, it's up in here. Here we go. 2112. 2112's over here. Here we come. You see it right here? Okay. So that one we missed on the 15-minute chart. Let me just put this on here to remind you. We were looking at 15 minutes back here. Looking for this reversal pattern that happened at the one right here. Oh, there's one that happens right there. But anyway, right here, that 12 o'clock one that we were looking for. See that reversal pattern right there? We make a new high. Look for this reversal. Body breaks down below it. Come back inside it on a 1-minute chart. You catch it, and you've done nothing but stay short here for the rest of your run back down. It happens all the freaking time, you guys. Oh, my carrot. Let's keep the motivation going. This is the hidden secret. Those of you who are new to our channel, the true secret of the algorithm is right here. It's the carrot. We know the algorithm is completely driven. It's what everybody expected. It's a vegetarian. It's not a carnivore. It's a herbivore. It eats carrots. Anyway, where are we at? Where are we at, my friends? Morning, morning, morning. Mohammed. Hello, mate. How you doing? And it will still grow. Very clear reversal. Julian, for the reversal to be confirmed, it has to be confirmed by one body candle closing above or below the fair value gap, or it can do it in a series of candles. Yes, correct. It does. As long as the body closes below. Okay? And we have to have a swing above an old high. Preferably body swing above an old high. I like bodies getting above a high. Okay? If you get just a wick above an old high, it's just a run on liquidity. But that fair value gap, when it becomes an inversion, it becomes a senior array. Again, that's just my terminology. They're just like a stronger array. When Michael talks about PD arrays, and he'll talk about some are stronger than others, some are weaker, and there's a hierarchy in the PD array matrix. He doesn't talk about in the PD array matrix, he doesn't talk about inversion ones becoming a higher or lower PD array. He just talks about it later on about how important, how they can be a level of support. I look at those things as, if you're looking at chess pieces, they become very important chess pieces. See this swing right here? We've got a swing that's happened. I don't want to see this dig all the way back up. See how we've hit the mean threshold of that candle right there? I don't want to see this snap off of this now and start running back up. So we're looking for a reversal pattern here. At this time, 46, watch right here. If we have a closed candle above this, you go long, and you're playing just inside here. So now we've got to close above it. Let's do it. I'm just going to give you an idea. So let's buy just one. Remember, if we're going to buy something and we're wrong, oh, it should actually come all the way down into here. So I'm going to pull that guy right there. So watch here, 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 and then this fill down in here. And we're trading from one to the other. And if we trade to this one first, before that one, I wait. If we trade all the way through it and come back into it, it loses its luster, but still doable. And then you can do multiple runs. As long as you look inside the range that you're sitting in and start pulling your fib tool and start scaling out with your fib tool, or I showed you several different methods on the weekend on how to do that. Ideally, I want to see this just keep smashing down here. We could run back up to Sunday's open one more time and the New York Open midnight candle. So that could be an upside objective if you're running for 10 o'clock. Oh, let me get on the right. See, now we're back up into here. I have a body of the candle breaking below it. There's your fair value gap inversion. We're coming back up and we just tagged the edge of it now, so I'm expecting it to roll back down into here. So you're between this one and this one. So I'm not going to take either one of these right now. I'm going to wait. If you do take this one, take it right up there and use your fail-safe I taught you on the weekend. Right there. There's your fail-safe entry. Now watch, if this trades on a close, you decide how you're going to use it. You're going to wait for that close now at 18 seconds. Stop loss is sitting up here. Oh, what the hell, I'll do it with you. Those of you who are going short, I'll go with you. I'll just sell right now. I'll go with you. I'll do the same thing. So if you guys are playing, I'll play along with you. So here's how you're going to take your you're going to use this end here to try and catch those little sneaky little rats that, remember when I was telling you about those, you got to try and catch during your fail-safe, you got to try and catch it wrong. I'm kind of hoping it fails here so we can see how those people who are watching, you can see how that stop loss should not get hit unless it rips through and takes us out. Stop loss means something different to us. 13 seconds. Look at that candle there. Don't forget you still have that one of these little equal highs here. So I will give it up to the mean threshold of that candle right there. So now we've traded above it. Now you can do your fail safe. So that's the point. I'm going to give it slack. Now I want to see rejection block. I want to see it come back down. Now I'm going to put that right there. In other words, I don't want it to go any higher than that. Okay, good. So the slack I gave it. Now those of you who are like, who use the actual fail safe for this fail point here, as soon as it closed above, as soon as that opens and taps that high, you're out. I gave it to the midpoint of that breaker and these little highs here for a little bit of run. So now it's cleaned out the highs. So you don't get your full you don't get your full stop. Now you look for, and see how this one, we didn't get a chance to get in on that yet. So when you get one that's now breaking, we want a body. So that's why I like a body getting above there, not these wicks. Now we've got a body getting above these highs. And it's still a wick. I want to see this kind of setup happening over here, but with a body. I want a body above it, not wicks. But I don't mind. I don't. If we fail, we fail. Your fail safe. Those of you who used it on the weekend would have got out right there. I kind of gave it a bit more of a slack and then got out right as the rejection block was getting taken out. So you want to see that stop. Create a fair value gap here. Roll over, drive through it. Create another 1 minute to come up into here. And don't forget, we got 10 o'clock yet. So the 10 o'clock, wait for your silver bullet. If your silver bullet sets up just inside this to go short, aiming for this guy down here. So pull your fib tool inside that range and start collecting inside here. There's the fair value gap. Yeah, you would be short from here. If you play that right there, you think, okay, if that's going to return back in here, I'm going to continue going back down short. You got a ton of liquidity sitting back up here. It just ran that out. That's why I don't like wicks. I like a body getting above that. So here's something you can put in your mental note or a diary or a rule on your these inversions that happen below when a body doesn't break the high of that swing. Then you go, yeah, that is a setup technically, but it's not a strong setup for me because I want a body above. That could be your reason. Write it down as part of your setup. This one here was the reversal going back up, so you're looking for here to support further upside, and you're here to support downside. So they're two conflicting in a very small range, and obviously the upside one is the winner versus the downside one. That's why you trade between the two. So you just wait for your setup. I want to see this. I do not want to see that end right there. But what I want and what the algorithm wants to do are not often in harmony, you see. So look for a breaker. Once you break a body above an old high, look for a breaker. First thing you look for. Where's your breaker? Body's finally breaking above it. And consolidations. You want to see a really clean reversal pattern? See the sharp candles that come up, create these fair value gaps, and then they just snap right back down below it, quickly tap up into it, and drive down. Those are the most beautiful ones. Like they're not in these consolidations that slowly break down. Yeah, those work as well. But you want to see the real snappy ones that just, they're really clean. Let me just show if I can see this really. Body breaks the high. See that? Body breaks the high, creates that little and then boom, we get down below it, quickly come back up inside it right here. Stop loss is there, and now we continue down on the downside. So it's these quick little reversals, not this wandering consolidation type patterns. You want to really see them snap like this. See how that gap is? You don't even get a chance to get on it. That's got intent to get back up above these highs here. So now what I want to see is this clean out all this liquidity, maybe even come back up into this fair value gap sitting here, and then just snap down through our inversion point, and then come back up inside it, and we continue further on the downside. I really want to see this thing start driving all the way down here for this week. It's like this thing has not been, all this liquidity sitting underneath here in that fair value gap that has not been completely filled in yet. It's like I've taken out all the highs that's sitting up here, and now I want to come back and get all the people that want to go long in NASDAQ. And here'd be a great opportunity now to take out all the shorts up here. And now you want to come back and clean out all, and there's a ton of people that think NASDAQ's going to go through the roof, right? So they want, this would be a great place to come back and gather up all of those people and then clear them out, all their stop losses that are sitting down here, gather them all up, and then finally make the big plunge like this April. I'm expecting this April plunge down into here, or even deeper, because there's more. And I want to see this trend line phantom here get taken out. There's so much I want to see, and I wanted to see it happen inside this. Now that high's been taken out. I want to see that hold now and see this just come ripping down, but we'll wait, because once we get below this with the down close candle, come back into it. You see how this on the daily becomes the reversal, and then we start expecting to see rejection block low, breaker, rejection block low, breaker, rejection block low, and then start cleaning this stuff up. So it's a big wish. A lot's got to happen on the daily for that to happen. You got to have a lot of patience. So I got 5 days now to see what happens with this fair value gap. Whether or not we just came back to the midpoint. Oh, sorry, that's not on the midpoint. That's there, this one here. The midpoint. If we come back to that and we just get some support off that and continue going higher, there's the reversal that we expect off that point. So when you're looking at these specific parts of your array, in terms of the inversions, look for the high, look for the mean threshold, and look for the low. If you're digging back into this one here, you can see you've fully filled it from top to bottom, like right here. That one's done. If you just come back into this one here, we're not even at the mean threshold yet. So you want to see this thing kind of snap down, come back up inside this, and continue down. And then you're running between here and here. Pull your fib tool, scale out on the way down, put some money in your pocket and wait. Demo money, that is. We don't trade live here. You guys are all practicing this, right? Yes, it did. 10 o'clock, we could get one more little pump up, clean out this liquidity that's resting above the market here, and then look for your silver bullet entry, either short or long. If we come all the way down into here, pop back up, come back, find some support at it, silver bullet run. I can see two different directions they can go to here. So you got to be really tight range, play in a really tight range. Otherwise, if you start getting greedy and reaching down into here, you may be getting, and your stop loss is tight, you can get it taken very easily. So if you're trading on that time frame, trade on that time frame. Look for your entry here, and then close this out and start looking at your higher time frame objective. Put your stop loss in your higher time frame. Don't look at this, trade on this, and then when it comes back against you and you see these reversals, you're like, oh, I'm wrong. No, I'm trading on a higher time frame. Those reversals that happen on the 1 minute are just simply retracements that happen. It's the bouncing around that occurs inside that candle on a daily basis. If your objective is down here and you're trading on the daily, stay there. Look for your time and price to get your entry. And once you got your time and price entry, close up shop, go shopping, go out with your family. Good morning, movie star. Hello. Julian Oroja. News at 10. Oh, that news could be deliciousness. I like to see that just pop up there quick and then just slam it down. Come on down. Muhammad's like, man, come on, you make me scared. I longed it from that down turtle soup. Oh, you went long there. Well, pay yourself. You pay yourself. You've got an excellent point to pay yourself there. If you turtle soup this baby right here, that's a good run. You see a reversal happening. If that breaks the reversal, for me, whenever I'm in mine, and I'm not telling you how to make your trade, Muhammad, you do what you need to do. But for me, if I'm trading between one range and another, and I've already hit my range high, pay yourself. Yeah, leave a piece on for a high, and I'd have my stop loss right up in here, because that's what the fail-safe is about. The fail-safe I taught you guys on the weekend is also a trailing stop loss. It's a dynamic trailing stop loss, not like any other stop loss you've had in the past. It is your point where you go, if this fails on the downside with a closed candle and comes back to it, it's the new direction down. It's the new direction down. If you keep focusing on trying to get higher and you're trading on that time frame, ignore what I'm telling you, because the retracement back towards your candle is going to make you sweat a bit, but expect it because you're trading on a higher time frame. You're looking to get long now off that order block there, whatever. If that's mean threshold is what you were looking for to get your turtle soup off of, and you saw this inversion set up, you go, sweet. When it comes back in there, that's my guarantee for my long. I'm just going to scale out a piece here, move to break even, and I'll let it buck. Just let it. I'll pay myself some money and sit on the sidelines. This isn't the only trade you're going to get today. You're on a 1 minute chart, folks. This happens all the time. All the time. You getting upset about missing a chart or catching it wrong? If you've got money and you pay yourself, pay yourself. If it takes off and tears off, you go, don't shake your fist at it. Just go, all right, I'll catch the next one. There's plenty of buses. There's lots of trains coming through. You can hop on anytime you want. If you have your setup, it doesn't matter. If you lose something, it doesn't matter. You didn't lose because you paid yourself. How is that ever a loss? Anyway, that's just me, Muhammad. So sorry. Right now, I am bullish. I'm with you. I'm going bull. If we lose this here on a close, body close, not a wick, body close, then I change my mind. And then if it switches back to the other side, I change my mind again. I reserve the right, because I'm in a consolidation. So you're going to get flip, flop, back and forth. Oh, now look at that. See, we closed below it. Tippy-tappy. Time to go short. If we break that high with a body, you change your mind, you go long. Not that I would take this. I'm trying to just show you how this is I'm looking for a body now. If the body closes above this point, I'll get out. This is just a fail-safe, and yet you can lose over and over. Again, I don't have that sharp up or down. I just want to show you how the fail-safe can save you, unless this just takes me out right away. Then this is not really proving my fail-safe really well, but we'll see what happens in the next 20 seconds. So keep your eye on that level right there. It needs to close below that level right there. it doesn't, take my stop loss here. I don't want it to go any higher than that now. I'm out. On my stop loss, now we're above, so now I'm bullish again. Consolidation, key point right here. Off a breaker, off a breaker. Sorry, this is a breaker right here. Last stop close candle before run below this low. So where are we coming back to? Breaker. When you trade above it, come back to it, look to go long. So I'm long with you, Mohammed. I was short, now I'm long. Just because of that key spot there, or breaker if you're into breaker stuff right here. That's another trade setup to go long. See why consolidations can beat you up pretty good? See, if my stop loss was still sitting here, I could trade to get break even right there. That's why you take that spot. If you're going to take the fair value gap, you always take that one, because if it comes back to you, you can get out, because usually if it's going bullish, it tends to break through the inversion, come back, tap the inversion, and then go long. So that tapping is where you get out at a break even if you're on the wrong side of it. It's how much patience do you have to wait for it to come back here? That right there is your fail-safe. Whatever way you want to tweak that. For me, it's that as soon as I close, that high is my new stop loss. So I move my stop loss to here. If it taps it, I'm out. Some people might say, I'm just going to leave my stop loss there, and I'll give it one opportunity to come back and take me out. So my stop loss, I'm going to let my stop loss remain there to get taken. And if it comes back to that exit point there, which it should do before it takes the high out, then I'll go to break even and wait. And clearly you should wait inside this mess. This is not a nice place to be. And we're at 10 o'clock now. So we have no silver bullet set up in there. So a lousy place to take an entry. But I just want to show you that the fail-safe can still work. Now the high's taken. See how the fail-safe saved you that complete loss right there? Because we're still bullish. So it's not shaking us off. Get back up on the horse and you go long. So here's the run. Nice sharp. This could be the next price leg up. We've now run out the liquidity above all this. We talked about this fair value gap above is here. There's the fair value gap that's forming. You want to see that 21 seconds. You want to see that close. That's the high right there. 14 seconds, create a fair value gap here. Nice and sharp, come back down, trade below it, get through it. There's our silver bullet. 3, 2, 1. Here's our excellent. Now you could either go consolidation, cam model 1 for a run up. If you're anticipating this to go even higher, so Mohammed, good for you. I'm still bullish with you, buddy. I was short, now you're long. So if this does continue and you're still in this, excellent. Cam model 1, cam model 2. If you trade below 50% of the consolidation model, you get out. Use your fail safe here. So off this breaker, last down close candle before run above these old highs. You have a swing point here, and you have a swing point right there above that old high. So if we get a return back into here, there's your cam model 1. Mean threshold of that would put you in at least cam model 2. So if you lose the threshold on a close, come back to it, get out, so you break even on that. That's cam 2. Next price leg up. Now, does that coincide with something over here that we're looking at? We have Sunday's open, and we have New York open candle as well. So that's your upside. We talked about these as upside objectives when we were seeing this swing point down in here. You get bounced around a bit in here. Next price leg up. So at least look for this. And if we continue to push higher, look for Sunday's open and New York's midnight candle. So we have 18,536, 18,540, 18,540 puts us in here. Now you just wait. Muhammad, if you're chasing that up, I don't know if you were with us on the weekend, your fail safe, see this one here, it's this one here. You want to be positioned just below this one here. Because if you lose this one on the downside, come back into it, then we've got a reversal. So we use the fail-safe model as a means to protect all your stuff that you've made on a turtle soup here. Then you want to protect that on the way up. And all you're using is your, so for here, that would have taken me out. I would have collected here and here. And as soon as I saw the body break below that candle there, I would have closed out my long and waited for the next setup. But that's just me, and that's how the rules of my model. And then it went long again. You go, okay, now we've got a body broke above it. If you come back to it, you can get long again at that point, which is right here. See how the body breaks above this piece right here? It broke below it, so now you're bearish. Then it broke above it, now you go bullish again. And as soon as it comes back into it, right here, it gapped, it literally went to the top there and then opened, came all the way back down inside it. You go long, your inversion is here. So your rule now is if that's where I'm going to go long, then my fail-safe rule is below this low. So if I break below it, come back into it, and we're going short again. And it's just, you keep flipping it back and forth. You're in a consolidation, so you're going to see this run over these important key linchpin points over and over again. So that's why you like something that's clean and it doesn't have this consolidation where it jumps above it, jumps below it. But you'll see the validation, the moment when it jumps above or below it and continues, you'll see it right there. Continues inside it, right to the pip, right there. See that low? That low? Taps it, and we continue on the upside. That may not be enough clarity for you. You guys may look at that and go, yeah, you're just form-fitting that. Okay. You'll see when it's clean later on. So right here, my stop loss right here for this run up, even though I don't get the whole price point right there, I don't want to see a body trade below that, come back into it. Otherwise, that's the reversal short. Now you may go, no, it's going up higher. Well, that's fine. You're on a higher time frame. It's where you think it's going to go. Then keep trading it. This stuff won't bother you. You'll look at this range here and you'll go, I will allow, inside this range, I see a premium array, I see equilibrium, and I see a discount array. I will let it come all the way down into the discount array. As long as I don't trade through it and into it, that'll be my point where my higher time frame will continue on. If I lose the discount array, then it tells me that my higher time frame premise is not going to continue on. That we've got a deeper reversal into a deeper range. So right now you're looking at this smaller range you're in, from this candle here to this candle here, this swing point to that swing point. See the candle's now validated here. You come back up inside it. You see the body, and then you see the mean threshold. If you see the mean threshold, let me make these a little bigger for you guys. Look at the mean threshold. That's your line in the sand. You want to get above that to continue going higher. and then this is your line in the sand on the downside. In order to get back deeper into this range for a discount before going higher, we could get a retracement to 50%. So pull your fib tool. What array is sitting at 50%? What's at 62? Is this the reasonable place that it could aim for to continue to the upside? Then you have to give up all that profit if you're right or wrong. And it continues all the way back down. So right now you're still supporting price inside here. We do not have a body that closes below that level, so you're still bullish. You've chewed through the mean threshold nicely once. Body's still closing below it, so that's permissible for this to continue coming back down now. As long as that holds price. See that right there? Boom. Wick through it. Body holds it. Come back down. You want to start really driving through these candles here now and start digging into here. Looking at that range. If you decide to go, I'm going to go short here, then you go short inside this range, pull your fib tool and scale yourself out, catching a small retracement. And then if this continues to the upside, that's fine. Wait for the inversion to get broken again to the upside, get support on it, and then continue back up. But watch, just watch it right now. If you're not reading price between each candle and looking for how it validates, how it looks for discount arrays before running higher, it's really strong if it just comes down, stays above this, and then just keeps pushing. So you want to see that give way and really start to push higher. That's a positive sign for more bullishness. This is going false bull flag into the 1 minute fair value gap at 18,493, then down. I do like a return to the London low or London range. Bounce off of the London range and come back down again. And that puts you right in here. Yeah. If we do drive through, look for this fair value gap here and that old low right there. If this does take out London's high and then starts snapping down, quick reversal. I don't want to see the mean threshold of this candle right here give way. We've ripped through it now. We've validated it here. We've come back up inside, cleaned it up. Oh, I don't want to see that give way. Otherwise, we got more upside for now. I expect to see this just one of those false little wicks kind of put in the direction where I'm going to go give everybody this false sense that we've reversed direction and we're going higher, and then slam it right back through here today. And again, I don't want to marry the idea, and it sounds like I am because I think I am and I shouldn't be. You got to stick with where the candles are telling you right now. We're bullish now, so stay bullish. We're not bearish yet. Even though I want to go there, what I want and what the algorithm is showing me right now, it's all bullish. All you're looking for is a reversal pattern to get back down again. And right now we don't have one. This is a nice little bull flag. A nice little fake bull flag would be a little pop up, create the fair value gap, drive down below, come inside it, and then start really pushing down and start aiming all the way back into this guy down here. That would be a nice, beautiful range because we have no swing point taken out to confirm our continuation on the upside. All we have is just more fair value gaps being supported, more order blocks being validated. So still upside. Look for our price leg to finish off up here, and we'll see where it goes. My stop loss right now is right below the 1 minute fair value gap. Oh, good for you. So you're right here. So just be careful. You know, it could just come back and tap you out and then continue going. It's the body that breaks below it, comes back to it. That's why I think if a body breaks below it and then breaks into this one, then comes back into that one to find some support, you could get out there. But I like the fact that you're sitting that tight. If it breaks that high, I'd be right up against this thing here. I wouldn't even give that fair value gap a chance. Like right there, I'd be like, bing, right up against the bottom of that one right there. You've already tapped it once. There's no reason when the candle's up there that it should come back and tap this. You got more upside. There you go. Now our price leg is completed. Done. So here's a nice big push up now. Silver bullet, if that's your silver bullet, you took that one. There's your fair value gap at 10.10, 10.12, 10.14, 16. You're inside it. Run above the high. And now you pull your stop loss up super tight. So you're sitting in a silver bullet run higher with zero stress if your stop loss is sitting here. And if that is hit a PD array over here on a higher time frame, like at this old low right over here, this candle, this breaker, hit that breaker right there, took out these highs. Place to get out, finish that price leg off. Now wait, I want to see this turn into a fair value gap here. Stay open for another 9 seconds. Good. Now drive through it. Don't just come back and tap it. If it comes back and taps us, it's a cam 1 model, aiming for rejection and hold high. Quick little snap. And use your fail safe for your cam 1, cam 2 model, whatever you got. There's no cam 3 here, so this is the swing. This would be a nice little place for a swing. With that price leg now completed. The silver bullet fair value gap. In the weekend, when I was back testing, what I was realizing was the first 15-minute moves is 18% of the time is manipulation. Yes, it is. That's why I wait for the 10, 10, 10, 12, 10, 16. The first part is the wick of the hour, and the body, the hour starts after that. So for me, I look for my silver bullet after the 10.10 or around 10.10 to 10.16. I will look for my silver bullet entry for a short or a long from there. See, watch this. There we go. Get your short on. Get your shorts on. Not that you have to take your shorts here, folks. You don't have to do not copy me. Just watch and see what happens. The failsafe works again. We should not get our stop losses taken. That's in. Let's come back for a full fill. Now take your fib tool. You don't have to do this. Again, just watch. If I'm wrong, then I've only got 2 on here, so I'm going to manage this from the back end. This is another way of managing this. And I'll give this 1 or 2 candles to do this, because if we start going sideways again, it ends up being this mess that we had here before. So I get this ready over here. So if that's 1% of your account, then you say to yourself, I don't want to, I'm going to show you how you get rid of saving your 1% of your account if you're wrong. You shouldn't get 1% taken. Now, if it takes out a low, I just move right into break a zero stress trade. Now it's taking out that low. I'm going to move into here. Because if you got something, you should take something off here. I'm just looking to try and, I haven't got a lot on here, so I'm going to wait until I get into something a little more delicious and nutritious. Because, oh, my carrot. That's why the algorithm's not working. Let me get my carrot in here. I want to be just above my thing there. Carrot, come on. I'm going to give you a little love here. Here's a carrot. Come eat it. Oh, you need the carrot. See, it's very picky, this algorithm. He likes to have the carrot pointing right at him. He likes to nibble on it from the end. We are in 1 hour fair value gap. I don't know for long. So many thoughts are that since there's a market structure shift to the upside, then I would want to enter on a fair value gap like 18,488. 18,488. Now let's just turn this into a zero stress trade, because I don't care if it turns against me now. I don't want to see it have to come back and revisit this one more time, so I'm just going to sit above, inside that fair value gap now that we've come through it. We've visited all the levels that we need to visit on it. I want to see this get some legs now and get out of here. So if it comes back and takes me out, I'll take my $100, move to the side and wait. And then I'll go, ugh. Well, if it just hammers all the way down here, you move your stop loss up too fast there, and oh. Now I'm going to bring it to here. I'm just going to manage this from the back end. You take a piece off right here at 50%. Take a piece off right there. All those people who are looking at the higher time frames, and you're saying it could do this, it could do that. It hasn't done that yet. Have you got support on your higher time frames that support this? This told me right here that we've got a break in structure to the downside. It's tipping its hat right there. I'm going short. 4 small little arrays first. Pay yourself. If it trades back against you, take your $230, move to the side, and be happy you just made $230. Or go, no, that's not how I trade, Darren. I ain't going to do that. Fine. This is super scalping, my friends. This breaker right here, ideally you'd want to sit here, but I want to collect my money, so I'll just sit and wait. You could technically be like right there, but I think I'll just leave my, you can take me out right there. what do you think about Tanya Trades? I love the fact that Tanya Trades puts it out there and she's trading live in front of you. It takes a lot of courage to sit here and do what we do when we do this live. If your analysis of the charts is wrong, you're about to get wrong in front of a lot of people. You're about to get your ass handed to you, and there's a sense of humility. And as you can see, I don't care if I'm wrong. I know the setup is going to come, and I understand price action well enough now that I don't care if I impress you or not. There, you take your next piece out. So with Tanya and Hydra, I love those guys. I totally respect them. Tanya's putting it out there live, trading a demo or a live, or I think she's trading a funded account in front of people. So when you see her lose, she's losing real money, her money. And, I just think I love her for it. I encourage her to continue doing what she's doing. I love that she's got lots of followers. I love that she's doing honest, trying to help people out. I support people like that. If you're out to help people, I fully support you. If this is all about blowing up your ego and show them like that Patrick Whelan idiot, that's not great. And it's just a disgusting display. If he's that good, it's a disgusting display of what he does, because it's all about significance with him. Sorry. If I was going to trash talk somebody, I just hate what he's doing there. I hate what he's doing. I love that he's making money, but is he doing anything nice with it? It's just a big ego push. And he beats up ICT, so I haven't got any respect for somebody who beats up ICT stuff, because you don't see the logic of this, or you haven't wanted to find the logic in it. Then you're missing something. Because if you can't see a level of accuracy here, because you don't like ICT, you don't like his attitude or whatever, it's like no different than me not liking Patrick. I may not like his attitude, but if what he's got works for him, who am I to dispute it, right? This is why you pay yourself at the 50% mark. Okay, so it just came back, took me out. I'm good with that. If it comes back into here again, let's rinse and repeat. You get to play the same game again, but with $250 in your pocket. Now this is padding. I've told you guys about this before. This has now become padding for this trade. So that stop loss now is a little more, in terms of the principle that I put in, I start going, this one's a little more bearable now. I'm not really going to lose all that kind of money. I get to play the same game over again, right there, to go short. And if I lose above here on a close, my stop loss doesn't get taken. There, that's another one. That's like a rinse and repeat again. The same level I got in earlier. I make all this profit, come back up. Let's play it again, because I haven't got a swing pattern reversal here yet. So I'm just going to play this again. I'm playing it down deeper though. Ideally, you want to play it right back up here where I just got it back in, because if it pops above you, you can get out at a break even. This will take a loss up here. That's why you always, if you really are one of those people that say, I don't want to lose anything, I want to break even or just small losses, right there. That's where you want to enter it in, right where I did the first time. Then you're watching right here for this candle to close. You got 16 seconds, and it needs to close below that point. So this is just for a ripper that just goes ripping right through me. See that? We're still closed right on it. Now you've opened on it. You don't want to see this. You want to see it start really getting some legs and coming down now. There you go. So now we're just playing the same game again. If it gets down into this candle right here, you should pay yourself. Now for me, I don't want to see it take that high out again, so I move my stop loss to here. It's done its thing. I don't want it to come back up there. It's revisited this multiple times. If it starts to pop through this now and come back, Now I'm thinking it's going to take a run up there. So that now I'm definitely going to come into profits. Whatever I made here, that buffer I made there, because I got greedy and I wanted to go down here and it didn't come and it came all the way back to me again. I didn't pay myself because I didn't get out at rejection blocks. I didn't get out at the 50% that you should be getting your stop out. That's why I trailed it from behind, because it didn't have a lot to take out. So now that buffer, even if it comes back and takes me out, I still am up $100. Protect your assets, folks, as best you can. So you want to see this. Ideally, I'd love to see it just come ripping right through this, create another little body right here, and do the same kind of thing here. We've swung above this small little swing point here. Ideally, you want to see it get above that in order to create one of these, but that's our fail safe right now, is right up against there. I should not see it revisit that. Right there, pay yourself. So you can move right into, cover the cost of your trade if you want. I don't care. If it comes all the way back up in here, takes me out, that's fine too. See, this is good. So we have a body trading below it right here. Tap it right there, and we continuation. Pay yourself right there. Pay yourself right there. 50%, pay yourself again. And are you collecting money? Here's another $100 we're locking in for profits. Fail safe, pay yourself. I've only got one on here, so I can't take it. I'm just trying to give you an idea of how you got to pay yourself along the way. So I'm slamming this in, and some people might go, you know what, you're just gambling. Okay, whatever you say. Rejection block, pay yourself. So far I'm guaranteed $350 by gambling, when I've talked you through all my logic, all the possible areas that make sense to me. We could come all the way back up in here and take me out for sure. But if you pay yourself down there, you would have paid yourself another whatever. So there's another $100. So now you do the same thing again. Rinse and repeat, folks. Rinse and repeat. Let's put another one short right there. Stop loss is going to go above me here. See the padding I've really created here now? Even if this comes back and fully takes me out, I'm up $350 already. That's my fail-safe now. If my fail-safe, and this one becomes the new, oh, it doesn't. We didn't break that low point. If this happened down here, then I'd say, ooh, this could be the reversal for a further run up right there. So here's how they start to overlap, and you got to be really smart, really quick with your entries now. We've done a rinse and repeat, rinse and repeat. I want to see it get through the midpoint of this candle. If it pushes through here, I'll run right to break even, because I don't want to see it get above this, you see. If it gets a body above that, that becomes an inversion. You find support on it. Well, inside this range, that order block's the only other choice I've got left, so I don't want it to come all the way back up into there on it. Obviously above here on a close, so you watch this here. I'm in a consolidation, so now when you're trading consolidations, we're not trading this 50% anymore. I'm literally inside this range between that candle and that candle. So if I want to stay bearish, I want this candle to provide a level of support. It's not a breaker, so it's a minor candle. It's a pawn. If you're looking at chess pieces, it's a pawn, not a queen. So there, we've just tapped it. I'm going to see it come back down. Now we're between here and here. We're compressing, we're getting smaller, and I'm stuck in something where I can go take my $5 right there and move to the sidelines and wait. I'm still want it to go short, but I'm going to move to I'm in a consolidation. I'm stuck in between there. I'm not going to make any money on that, so I'm going to wait for a breakout. There's my logic. Okay, it's not like going, I have to stay in this. I'm married to my trade. No, you're not. Look at the range. There, you're stuck in something. Let's wait for you to get out. You're inside the mean threshold of this candle, and you've broken the mean threshold of that candle, which is a good sign. You want to get down now. But see how the body's traded above this already? Now we've come back into it. So now that to me is providing support to reach the higher objective inside the small range that I'm in, which is like right there. So you've hit it. You came up on top of it. You popped up onto it. You're back into this guy now. Once that gets validated, you're even tighter now. Now, has it validated it? Yes, it has. Order block. You need to give this one away now. We've already eaten through this one, so I expect it to continue on the downside now. And whilst it's been befuddling around inside here, we've already cleaned out 300 and some odd dollars. Because we just use simple logic to run for simple premium and discount arrays inside ranges, premium and discount arrays. Again, I kept telling you, pay yourself here. I only had one on, so it came all the way back up inside me, and I took a $30 loss, I think it was. Eat right through that. Keep coming. Keep coming. Come for the carrot. Oops. Come for the carrot. See how it hits the mean threshold there, bounces on it and says, now I've got to extend my arrays. I've done my thing here. I've got to extend the array to a rejection block, rejection block. That's all I've got left. Or then I have to start pushing up to higher arrays or lower arrays. Start digging down deeper into this other range. You're in a consolidation. They do make sense. Every candle makes sense. It's not just going aimlessly back and forth. It is hitting premium discount till it runs out, and then it's going to go, I got to expand the range. That's what it does. And it might expand the range by just another wick, extending that range a little higher again. Or it may just put one candle above and get back into that range. And you see those seek and destroy missions, like running above and below. If this was the daily candles right now, you got to say to yourself, there's nothing in this asset. Go to another asset class. There's nothing in here for me to play with. I'm sitting in the middle of a range right now. I'm in equilibrium. I can't even make a decision on which way to go. So get out. Wait. Just wait. Was back testing. Okay, we are 1 hour. My thoughts are that since there is a market structure shift to the upside, then I would want to enter into. What do you think about the Tanya trades? I love Tanya trades. Good for her. If you guys can support her. And Hydra, they're good people. They're not out. I don't have the impression that they're out to screw you. You know, they're trying to do a business, I see, and they're trying to make some money on the sidelines doing what they do. They're very smart at what they do, and eventually I might put some swag on here, like a t-shirt or something. Hey, support my channel by buying a t-shirt. My carrot shirts. I've got some ideas for some carrots. Use some of my artwork, so you'll get I might start up a little marketplace there that says, hey, buy a t-shirt. I'm trading. I'm bullish today. Have a carrot riding a bull. I don't know. I got some ideas. So I appreciate that they're trying to make a living doing what they're doing. It takes a level of skill. It takes a lot of years to get to the point where you can start to read price action like this. You guys are getting it for free. But hey, I can understand that they're doing it over there they're trying to make a little bit of money on it. Bless them, man. Good for you. Try and get out there. Imagine doing all your trades right now live in front of hundreds of people, risking complete failure, and people just look at you like, I hear crickets, man. What are you doing? What are you doing? And then you start to feel the anxiety of not only failing in your trade, but seeing other people and what they're going to say to you. I don't care what you say about me out there. So my mom brought me up right. I've got some self-respect and some dignity that I don't care what people think. I know what I know. I do what I do. That's why you got to have a level of confidence to run into a burning building. You got to have some crazy confidence to trust that you can save whoever's in there. There's a sense of arrogance there, maybe. I don't know. Or just foolhardiness. But yeah, I love Tanya trades. Good for her. 4-hour fair value gap. We are in. Where's the take profit? Where's your take profit? Don't worry about where mine is. Where's yours? On the weekend, Julian, if you were there on the weekend, you would see take profit is entirely, I've given you several different ways to look for ways to take profit, but I can't tell you where to take your money out, because then it's like I'm trading for you. You have to develop your own style and your own tolerance for being in the markets. You may go, as soon as I get to a rejection block, I'm taking some of my money out, moving to break even, and then I don't care where it goes from there. If it comes down into 50%, I'll take some more out there. If it comes to 62, I'll take some out there. Maybe I won't even use a fib tool. Maybe I'll just sit inside this range that I'm in and say, well, look for a discount array. If we can get back into that discount array, I'm getting out right there, right there, right there. Oh, there's a cam model. Maybe I'll get out at the top of that. Or maybe I'll take a 50%, maybe 79%. I can't do it for you, man. It's entirely up to you where you decide to take your profits. I can show you where to get in. Where you get out is up to you. That's all your trade management, not mine. I can't manage everybody's trade, right? Neither would I want to. Where's take profit? I'm out with 97 points. Mohammed, you rock, buddy. 97 points in your pocket, my friend. In your pocket, even if they're demo dollars. Take your girlfriend out for a demo date, my friend. Just say, honey, check out all this Monopoly money. Look, there's hundreds of dollars there. We're going to eat some paper dessert. I even drew this little picture of a cupcake for you. The world of make-believe. But the better you get at that, Muhammad, trading this in demo accounts, when you decide, if you decide, whenever you decide to go live, you've practiced it enough time in a demo account that you'll feel that little bit of anxiety putting your live cash on the line. But if you've practiced this and you have your fail safe and you know price action, your stress level is going to drop dramatically. If your stress levels are huge, write it down. Journal why you're feeling what you're feeling. Oh, the macro has begun. The macro has begun. Your humility speaks volumes. Appreciate your breakdowns, sir. You're very welcome. Take the reversal, paid myself, and off to a meeting. Dave, look at you now. You're just collecting some money and then going off to work. You're going to get to the point where you'll make so much money, you'll go to work. It's just something fun to do. Just something entertaining, because David's just nailing his reversals now. I think David's settling in quite well with his identification of reversal patterns now. So good for you, David. Well done, buddy. Be back in a few. Muhammad, my father said the same when I was starting trading. You are gambling. My answer was, it is not gambling if you know what you're doing. Still, my nickname is Gambler. The Gambler. You know what? If you continue to trade your plan your trade and trade your plan, when the money starts rolling in and your dad needs a couple of bucks to help him out if he ever needs it, or you've got a neighbor that you can help out and you're helping them out, and your dad sees that, and you just say, yeah, Dad, it's from all that gambling I do. Yeah. And luckily it gets to help some people out along the way. Your dad will recognize things like that far before he recognizes the things of your gambling. Say, no, Dad, I told you, it's the method I use to get into the market. I understand the markets. I'm safe with my money. And look what I can do with it now. I can help so many people along the way. And he'll see your generosity. He'll see your kindness. Or maybe he won't. I don't know. I don't know your dad. But if you ever catch yourself jumping in on a trade, chasing a trade, you are gambling. If you don't have a solid plan and you just hit the execute button and you got in on something, and you did not have a fail-safe. You did not have your stop loss planned. You did not have that point where you say, if this goes wrong here, if it fails there, I'm wrong, I'm out. Be humble enough to say, I'm out. I take it. I put my trade in the wrong place and get out. Take your loss, lick your wounds, move to the side, and wait for you. Have a pity party in the corner and beat yourself up. Not going to do you any good. And then wait for the next setup. Then get back on the horse, and you just got thrown off because you gambled. You did not have a solid plan. Practice reading your charts, you guys, and I tell you, you're going to get so good at reading every minute, every candle, that when you look at a daily chart, you go, "Oh my God, can you see that? Can you see that freaking amazing entry today? We're hitting at a perfect point right now. I'm waiting for my setup. Here it is. I'm in, lock it in. The moment you get below a certain point, you lock in profits, move to break even. You can do your dancing. You can do your white guy washing machine. You can do your little, whatever the heck that is. What do they call that? You're dancing around. What the heck was that one called? Oh, that was called the, I can't remember. Somebody will remember it. The sprinkler. That was the sprinkler or something. Yeah. You can dance around strutting your stuff because you practiced it on the 1 minute chart, and all of a sudden you see it on a daily chart and you go, wow, is that ever clear? What happens if you saw that on a weekly chart, guys? What if you could catch a seasonal tendency on a monthly chart right at the perfect, this was monthly charts, and you caught this right here on a monthly, you're putting your stop loss right there, and you're saying, if the month closes above this next month, I'm going to use an opportunity to get out. You got to have a lot of patience to wait till next month to get out of a trade that's failing. But if you trust this enough, you should be able to trust it all the way up to the 1 month. Now catch a 1 month trade, 1, 2, 3 months, all the way down to the rejection block. You call it 3 month trade. That's a mega trade, folks. That's a mega trade. You would have caught this one right here. This is 1 month, 2 months. This is like July, August, September, October. You catch that little run right up into there, the reversal. November, December, January, February, March, April, May, reversal, back up again. It's the same thing. See that trade we took right there? And I got out in here just because I didn't like all the waffling around. Still panning out. This trade up here, still panning out. Pay yourself at 50%, pay yourself at 62%. See how we haven't had a reversal pattern except for right there? That was the reversal, but it's not a reversal because we didn't break an old low. So be careful when you look at this one. We need to see this get below here for that to be a valid reversal. It's not just a it's not a reversal pattern until we break a low. This is breaking a high. That's a valid one. Come back up inside it. So you see how this one, when you trade above it, you go, oh no, it could go higher. This one here says, no, we're still going low. This one I validated. This one I did not. This one's weaker. If you're looking at strength of these two, it can go in either direction. This one's the stronger one because it took out its swing point. This one did not. Hopefully you get to see that. Pay yourself at 50%. Remember, buffer. This first entry, you paid yourself. Second entry, you paid yourself. Third entry, back into this thing right here. Pay yourself again. So you got 1, 2, 3 times you can pay yourself just coming off of these inversions. You talk about padding now. Man, you could put your stop loss way up there and you won't risk any of your initial principal. You actually still have money left over. You see how all you've done, I was explaining this to you guys on the weekend about building padding, a buffer for your stop loss, especially when you got these long wicks above you and think, man, that's a lot of distance. Well, then just start buffering it. Pay yourself, because if it keeps coming back to you, you're going to keep getting in, keep taking out at your rejection blocks, keep taking out at your lows, your 50%, and just keep coming back in and recollecting. That buffer now, that stop loss means nothing to you. It's more advanced strategies I'm giving you, but you understand it's all based on the principles of your PD arrays. What range am I in? Am I about to turn this bull candle, this consolidation right here? Am I turning it into a CAM model? The CAM model people right now are, they're salivating. They're looking at this going, oh, come on, give me a breakaway, an impulse leg above this, and you come back to it. I'm CAM modeling up that baby right there. And I'm going to run for the next liquidity point. Slam it up against break. As soon as I hit my first liquidity, go to break even, move to stress-free trading, and wait. And then if I see another setup in the other direction, I'll close out that trade and I'll get back in the other way. If you're into, I just want to get the rush of trading. We're back in here. Look for this one up here again. So you see how you can rinse and repeat. You do this trade. It's like starting this trade all over again. You collect some money, start it again. Collect some money, start it again. And if it comes all the way back up into here, and you can get to your perfect entry, which is right there. If it fails, break even. The best you can get is break even. All this consolidation, you traded inside a consolidation and made money while everybody else is still waiting. You traded to logical points. And you wait. You just wait for your next setup. You say, oh, I'm always going to have my fail-safe. Oh, you keep giving me another opportunity to get some more money? Great. I'll still put my fail-safe here. If you come back to me, I'll jump in there. I'll go short again. And if it fails, hopefully it doesn't rip right through me. But all the padding I built in here won't make a difference if it does. If it pops up above, closes above, comes back down, tags me out. Great. I collected 3 times. The 4th time I didn't get anything. It finally left. Then I look down here and say, why is it leaving? What down here gave me an indication that it was leaving? Okay. The only indication I have is the fact that we're in this range. We traded back to a discount array below 50% to go higher. We didn't get a swing. We just got the 50%. We just dipped below 50% to get us in. You're between here now and that high. Look at all the PD arrays that sit inside that. If you run above this little swing point right here, you're inside this one. If it rolls over and comes back down, you're between this candle and whatever bullish candle forms up here. You keep playing the range you're in, not 10 ranges over here. This does not decide this unless this is your objective you're aiming for. Just my perspective on that. Let's close that out. Look at this one here. The mean threshold of this candle has not been traded to yet. We're just short of it there. All right. So now I'm looking for a little pop up above here. Rejection block. We may even run up and clean this out and then pull back into the range and then look for 65% of the range we created since 9:30. 50 to 65% of this range. Unless this becomes this massive next price leg up. This one that we had to here is actually a 50% of the next price leg going up will be the next 50%. We'll see how it acts over the next 15 minutes or so. Look for your next silver bullet at 11 o'clock. Hater Gaming, what do you think about gold? I covered gold this morning. I think it was just kind of sideways. Where's gold? Gold's right here. Yeah, it's sideways. I don't have any run on gold right now. You're still inside this bull candle right here. So all I can give you is maybe a rejection block and rejection block. That's the next erase that I can see inside that range. So take out this high, look for a rejection block, and look for this low and this rejection block down here. So rejection to rejection, you're sitting right just above equilibrium of that range right now. So I got nothing for you in gold. I'd have to dig down further to find something. I do like copper though. See how copper's done its thing? Came back this morning. Oh, it hasn't quite hit it yet. Oh, it did here. Yeah, we called it low there. Came back inside going short. So it came back up, tagged that older block. Now we're coming back down. So we're looking for this copper. I would like copper over gold. Just the long term, from a daily perspective, it looks much more delectable. I'd have to dig down into 4 hours and stuff on that one to give you anything of substance. See how now your stop loss gets taken? Aren't you glad you paid yourself multiple times in here? There's your inversion right there. Or look, if I pull this across here, watch your fail safe here. So we've already collected on it 3 times. See how the body's closing above it right there? Good. Now, as soon as it comes back to here, now my stop loss will go slam, and I'd slam it right up right there. So if it comes back and takes me out, that's where my loss, right there, that's where my loss would be. That's my rule for it. You've got rejection block right above you. Now if it comes back into here, that's where you break even. If you got in down here, you took your stop up there instead of all the way up there. There, now boom, see how you've hit it? How you trade this is entirely up to you. This piece, like I explained on Sunday, is your fail-safe, is your way of trading it. Mine is the moment it pops up above that again, I'm out. You might go, no, I'll give it a little breathing room. You know, it might hit the rejection block. If it comes back down here and tags that spot right there where you got in, your break even right there. Fail-safe works beautiful. And your stop was never taken, but now I tell you, it's going to get taken. We're going to go up higher. Or at least into your rejection block, which is right just coming up to it now. So now I'm bullish on this again, not bearish anymore. Now there's your rejection block taken. So if you wait and your stop loss is getting squeezed, you better hope that rejection block is one of these rare moments where the high does not get taken. All we do is just roll over and come back down into the range again. Now you're hoping, waiting on a prayer. And this says bullish. So, and you had one opportunity right there if you waited long enough. This is what I told you before. When we get a break above that high, it tends to come back to the high of the inversion to give you an opportunity to get out. So if you put your buy order in there, or your sell order in there, and it fails, you see it go above you, go, crap. Well, when it comes back to me, I'm getting out because I'm on the wrong side of this. It's going to go long. And you get that one opportunity. As soon as it taps it, or it takes your high out. That might be a simple way of going, I don't want to sit here with my finger hovering on the exit button, Darren. I'm just going to wait. I'm going to take my stop loss, and as soon as it starts to climb up, if it breaks through the rejection block, then I'm out. If it breaks through 50% of the wick, I'm out. Whatever. You can create a whole ton of rules around here that personalize this candle choice, where you activate your fail-safe right there. How you activate on that candle is a personal preference. Personal preference. Now you may just sit there and go, I'm on the wrong side of the market. Woohoo! The moment it comes back to me, I'm going to take, you're going to do this. So let's say you had one short right here. You're going to put in 2 long right there. So as soon as it comes back, it literally closes out one of them, and then now you have one going long, and you're aiming for your first objective there. That's advanced trading. That's having a level of confidence knowing that this is a break in market structure, and we're heading in a bullish trend now. And your objective has to be 50%. It has to be your high. What if that turns against you? It ain't my fault. That is not the fault of the algorithm. It's the fault that you took your too many PD arrays above you and it failed to give you what you wanted. So you blame the algorithm instead of going, yeah, I screwed that up. It came back, gave me a perfect entry. I was on the wrong side. Yay, good. That's all right. I don't care. I'm not worried about this. I'm worried about changing it up now. I'll go break even, go long. That trade turns into a long. It was a short. Now it turns long. You go, sweet. Now I'm long. Where am I running for? Wow, the first one I'd scale out. This is the rejection block, a couple of pips above me. Then I'd slam up against break even and make sure I didn't take any more losses. And then if it takes 50% of that, I'll take some off there. And if it closes above 50%, sweet, we're going for the high. And if it takes the high out, I'll leave a piece on and I'll just keep moving my stop loss up behind it to manage it. So you can literally be on the horse. The horse does the spin, turns around, tries to throw you off right there. Say, oh, stay on. It threw me off of a short, but it kept me on and along. The horse will buck you off there. Or it will come back and take you out there. And then it will turn around and come all the way back down again. And you're like, crap, I was in the right direction. Well, did you notice that there was a swing point above that old high? Like this, above that old high, that gave you the indication that the horse is turning again. And it's kicking to try and throw you off. And you get back on it. And you start riding the bear all the way down now. Just watch it. This is a minute-by-minute play, folks. If I'm wrong, you'll see it. You'll see it. Master T, thanks for popping in the other day. Thanks for coming live with me, buddy. Appreciate that. Thanks for your time. Have a great day. See you later, Wales. Paper date. I trade with my live account and challenge. Still trying to pass it. Never back down. Never give up. I love your idea. I love your philosophy, Muhammad. I like it. God rewards those who pay it forward. Give and you'll receive. I'm a firm believer in the universe will, God, whatever your belief system is, that if you attract good things into your life, don't hold on to them. The worst thing you can do is hold on to them. Allow them to flow to you and through you. Just keep passing them on, and more will come to you. More will pass through you. Too many people, they hunt for money, and then as soon as they see it, they grab it, they hold on to it. You see this? We have a swing point. It did not take out your old high, by the way. So those of you who are still holding your stop loss, this is what you want to see, that little tiny fair value gap there. Want to see this trade below here now? Pop in, pop back up. Get some support. Away you go. You pay yourself. Did you pay yourself here and here? Did you pay yourself here? Did you pay yourself at 50%? See those ones I was pointing out? They paid me every single time. And you trail your stop loss off to the one behind it. And you made money in that little piece because you understand the specific arrays that Michael has outlined in his teachings. It sounds like he's some religious figure. In Michael's teachings, he likes to say blah, blah, blah. That's definitely not how he wants to be looked at. So, see, here's the low. We want to see a body, that little swing point right there. Let me open this up so you can see that it really is a swing point. See there? We've taken this high out. Body trades below it. Come back into it. Watch this area right here. This becomes that area of interest right now. You see how you can say, I can stay on the horse. I know when the market's going to turn. You have no idea what it's doing over here. You don't know that the market's turning in here. We see it right here on the 1 minute chart. If that rolls all the way back down now, you'll go, oh, how did I miss that? You didn't. It's right there. Traded below, popped in, short. Right there. Pay yourself right at that low. Oh, now move yourself to break even. You've made some money. You paid yourself. Don't go for the big greed. Look at the range you're in. Pull your fib tool now. Go to 50%. The same shit I was doing earlier. If it comes back and takes you out, you just got paid. You just got paid. You guys got to think about if you saw $1,000 bill or $100 bill sitting on the ground, would you walk over it saying, I'm looking for the bundle of cash down the road, or would you just bend down and pick it up? My buddy Richard told me that. He said if you saw a dollar bill on the ground, I remember when we were kids, if you found a nickel on the ground, you're like, yes, sweet. I can buy some candy with that. That's how old I am. Back in the day, 5 cents could buy you something. You could get 2 pieces of bazooka gum. When I was a kid, you and your buddy would share it. You'd have a piece, you'd like, sweet, for a nickel. And you got change. You get another piece later. And then you could split that with your buddy. Sharing, that's what we do. We share. Did you pay yourself at that low? Is your stop loss sitting way up here? Because if this closes above you, fail safe, pull your fail safe. Just coming back into this order block. You want to see it kick off of here now. That's an area of support, 1, 2, 3. If you start going through the third one, take your stop loss off right away. You should not go ripping through 3 of them on one candle. So watch the next 12 seconds. We should see that go come back in a nice wick. If it doesn't, look for the mean threshold right here. 5, 4, 3, 2, 1. Not a good sign. Now my stop loss would be like right there. I'm out. So did you pay yourself here? Did it give you a little bit of buffer in case you were wrong? There's your mean threshold. So you really lost from here to here, but you paid yourself from there to there. So you pretty much broke even. So that little bit of buffer you made on your first run, because you paid yourself right away, helped to support the stop loss you had up here, in case you were wrong. It still may come down. We still haven't closed above the mean threshold. Again, here's how you trade that little stop, that little point I was telling you about over here is this candle is your decision candle on how you trade your failsafe. If that's there and you say, no, it has to return back to my stop or my inversion here for me to go long, then I can get myself out of my trade right there. See how it's come all the way back down and tapped it? Mine was right there. It came back through, took me out. For you, you may just go, no, I'll wait. If it comes back here, it should come back and tap that before it takes the high out, so then I can get out. That could be your rule. And if it blows through it, you go, well, maybe I won't. Maybe I won't. Maybe I'll just hold on to it a little while longer. Maybe I'll pull my stop loss to here now and wait. Again, it's all individual, man. It's whatever you choose to do for yourself. So see how we're going bearish? Then we went, oh, we're going bullish. Now all of a sudden we're going bearish, depending on where this candle closes in 4, 3, 2, 1. We're right in the middle of it. So right now we're bullish still until we get a close below that, and then we're bearish. That's the problem when you're sitting up inside this range right here. Bullish, bearish, bullish, bearish. So you wait for a better setup. But if you entered in here like we talked about and you got short, you paid yourself down at that low, move yourself to break even. If it comes back and takes you out, well, you collected a couple of bucks and you wait. Bullish right up to rejection block right there. See that? Right on it. Thanks for your time. Paper trading. Muhammad. God rewards those. Where are you from, Muhammad? Iran, mate, but I live and study in Germany. Excellent. What's your area of expertise, Muhammad? What are you studying? And you can just tell me to mind my own business. See how we saw it? We were bearish, then we went bullish, and see how we went bullish above here? That's why your fail-safe works. For me, I took a small loss, Those of you who decided to wait for it to come back to you, you got an opportunity to get out. Then all of a sudden it ripped through you if you didn't take it. And you second guess yourself, or you started screwing around with your rules. It just came back and took you out, and you're like, I should have got out, because you're not following your rules. That's probably why that failed for you. I took a small loss. If you held onto a different philosophy, you got a break even. Or if you held on to that and you didn't take it, you just got taken out. This algorithm said to you, look, I'm changing directions. I'm not closing below there. I'm still bullish. And yes, I just cleaned you out. So then you wait, and you wait for a new setup, something more beautiful. So we have another run above an old high. Look at this fair value gap. So what you want to do, we want to take this little fella right here, and we want to move it over here. And we want to see the same kind of thing happen here. And then you're looking at your trade right now and you're going, ooh, man, I got this one here. I got these equal lows right here. I got a 50% of the range in here. Drop some coinage right there. We'll see how this candle forms. 14. I don't want this to be just a big massive wick. See how it's run down to the rejection block already? We don't want this to turn into a wick. We want to actually see it close below that. 2, 1, and it literally closed just slightly below it. So the rule will be the same. Rinse and repeat. If you had your first one there, second one there, third one there, we come to rejection block. Pay yourself at the rejection. Pay yourself at 50% of the wick. Aim for the rest. Because you're in a consolidated area, so you want to start paying yourself real quick and get your stop loss in tight. Or you go, no, I want a better setup than that, Darren. You think, fine, no, wait for a better setup. There's your midpoint one right there. As soon as you get to rejection, pay yourself, slam up against break even. So if it comes back and tags you out, then you can pop another one in there. There, pay yourself there. Pay yourself there. You have two opportunities in there. I wanted the best one, didn't get it. See how that stayed open? So now we've turned to this swing, that becomes out. We've taken out the lows. This potentially becomes the swing point for further continuation on the upside, see? And I'll be on the wrong side of it. So now you wait. Did you pay yourself here? Did you pay yourself there and there? Because if it comes back through you now, you're going to be saying, I should have listened. I should have paid myself at those spots. And then you get to come back and do your same trade all over again, like you're starting it out for the first time, and yet you just got paid 3 times. Right there. So how it traded right through. It would have got me in right there. Watch 13 seconds. See where it closes. Closed above, so it's just going to tap down into here and start coming up higher. Come back into this order block. Now, how do I know that? You study price action enough, you'll see it starting to go, okay, that makes sense. Rejection block. Look for the rejection block above you. We're through the mean threshold of that candle already. So look for further upside, and this candle. We're between here and these candles. These two candles are overlapping each other here. So for the downside, you want to see this mean threshold give up and start pushing through harder again. And because they're overlapping, the algorithm's got to go somewhere. It's either get a continuation on the downside. Now we're down. We broke below it. See that? You're bullish, bearish. So you bullish, came back up into a old rejection, back into the mean threshold of this candle. They're literally overlapping each other right now. So the algo's got to go back and forth in here. It's got to say, here's my linchpin. I've got to go above it, find support. I've got to go stay below it, find support and keep pushing down. So when you're in these consolidations, again, you're not trading this. You're just looking at it and saying, study price action. When Michael says to you, get in the charts and study price action. This is what you're studying. This is what you're studying. Muhammad, I'm dying, man. LOL. The fire hydrant. Oh, the fire hydrant or the sprinkler. Yeah, that's it. Thanks for the sprinkler. That was a while ago. I'm clearly way behind in my readings here. Sprinkler. That's right, the sprinkler. Give the man a thumbs up for sharing his knowledge. Erie. Thanks, Erie. Sirwex. What is this? Hey there, wouldn't the commissions for overnight holding kill that trade? No. Don't worry. That's an interesting question. Thank you for bringing that up. So ask yourself this. If you're holding something overnight, you're holding it for a reason. In other words, let's say you're on a 4-hour chart and you're holding this for a lower time frame objective, and you end up holding it overnight and it's cost you. Let's say you're on a Forex chart and it costs you triple on a Wednesday, and you're holding it from a Tuesday to a Thursday. You pay triple on a Wednesday with some brokers. The old brokers that I use with on MT4 or MT5, they always charged you triple. So you're either in a swap that you got paid for. So I always used to find like euro dollar. You trade euro dollar on a swap overnight, you get paid triple on a Wednesday. You get paid. You don't get charged. You get paid money. So the swaps actually pay you on Forex if you find the right asset class you're in. So if you're overnight and you really start getting advanced in your trading, you say, I can trade euro overnight on a Tuesday into a Wednesday or a Wednesday into a Thursday. I can trade that overnight off of an inversion like this. I'm going to get paid triple for my swap, and I'm going to get, because I'm in a short, they actually pay you to be in a short. So you get a triple short and you get the 4-hour overnight. So the commissions, the commission's nothing. The triple swap paid for my commission. And if your trade's okay, the swap, the commissions you get paid overnight are irrelevant. They're irrelevant. That's just the cost of doing business. This is the total cost of doing business. You see how we've got this now traded below it, came back inside it, found support. Now we're continuing down to pay yourself here, pay yourself here, pay yourself here. Move your stop loss in tight to protect you. You see how when you can go above it, you're going long. When you're below it, you're going short. That's the linchpin you hear me talk about. So no, I'm not too worried about commissions, but that's a really good question. I'm not worried about overnight swaps. What you got to worry about, though, is on a Friday, if you hold it over a weekend and it goes into a black swan event, you're screwed. You better hope you're on the right side of that black swan event, because if it gaps down 200 pips below your entry, you're paying the 200 pips below your entry as a stop loss when price opens the next day. That's why you don't hold trades over a weekend. If a black swan event comes, chances are it'll be on a weekend. The one I saw back in 2017, I think it was 2017, there was a massive black swan event in London. It was like 800 pips in less than 2.5 minutes. That's massive, man. It just went kaboom. And Michael was saying entire accounts are being blown overnight with that trade. So yeah, I'm not too worried about commissions. Julian, we have gone higher than the order block on the 5-minute. That's why I think this is going higher. But I don't know. Well, no, I don't. It's going lower. It's going lower. And it's only because this is my linchpin. I'm not looking at a 5-minute. I haven't looked at this stuff over here. If you're trading on a 5-minute, don't predict what's happening here on a 5-minute chart. You predict what's happening on a 5-minute chart with a 5-minute chart, not a 1-minute chart. Because I'll tell you, no, we're going short because we broke that there. There's my short. So until proven otherwise, we're short. And when do I get a long? when I see this low get taken out, and this, if this turns into a fair value gap right here, and then we start getting up on top of that, then I go, yep, I agree with you. We're long now. So don't say long in a 5 minute until you see a long setup in a 5 minute. So let's just pull this example here. So there's nothing in here that says this is short yet. You're right. This is a long. We're still long. We have not broken anything to the downside to say this is short. We need this to break below here on a 5 minute chart to go short. But on a 1 minute chart, we're already going short. You see right there. So until proven otherwise on a 1 minute, you'll realize in another 10, 15 minutes when this finally closes below here that now you can go short. Otherwise, you are still long. You're absolutely right. You are still long. But for me, I go, nope, I'm short already. Where's your stop loss in here? If we trade below this, come back to it, that's your long is out right there, because now you've got your swing above this little swing point here. You've got a swing into this, go short. Put your entry in up there. If you're wrong and it comes back up, tags you, and you keep going higher, you break even and you can get on your long going up. Where you put your entry in and the fail-safe you used can either get you breaking even and going in the opposite direction all within one trade. If you're wrong, you'll see it. But wait, don't take my word for it. Watch it. Practice it every single day on the 1 minute chart. You watch. And when you're on the wrong side of it, you're on the wrong side of it. You're only taking little losses inside here versus full massive stop losses. So in order for this, see, we did not get a fair value gap there for a reversal. So you're coming back up into here. So the only other thing I have left now for a reversal pattern is getting up on top of here. Then I go, yep, you're back long again. And then whoever it was that said we're going to go long, I said, yeah, I was already there 5 minutes ago. I already knew we were going long. Right now I'm still bearish. And this is a 27 candle, 27, 28. So this could be a swing point right here. Now I want to see it just come slamming down here. Where's my little carrot? It's got to get through here. Mean threshold of that candle has already been hit. Right there. I know you want to see this come down. We've gone higher as he's dropped the information. No problem. Master T, no problem. No trading for me. Just today, just hanging out. Excellent. Julian, laughed my ass off. Seriously, do you drop this pot of golden information every stream about ICT trading strategies? Yes, I do. Yes, I do. I just show you how to trade it on a 1 minute chart using everything our mentor has taught us. And this is the application on a 1 minute chart. And I'm a firm believer in if you practice here, every other chart that you trade on, every other chart you trade on, this will literally change how you see the markets forever. Forever. It will change how you see the markets. It will change every stock you invest in. It will change everything that you put your money into that has a candle in it. You will see so much more clear now when you make your entries. And you will see massive changes in your profitability once you understand this 1 minute chart. And look at where it's come all the way up to. Right inside that inversion again that supports the price, right to the very perfect place. Again, this has been this whole thing when we're collecting money over here, the 300, same thing. You entered in here. I would have got out there because it could closed above, but If you entered in there, you take your rejection block, old lows, you pay yourself there. It comes back up, you get in again, rejection block, old low. Comes back up, rejection blocks, old lows, rejection block, old lows, right there. It's just come back. This one here hasn't hit this one yet until it came back one more time. Took everybody in for another big run down to rejection block. You've paid yourself because you have learned that rejection blocks are where we get paid, people. And you've built buffer, like tons of buffer in here. That stop loss is still sitting out there. You're collecting ducats and you're getting a chance to play again. Play again. Thanks for giving you money. Play again. It's like somebody running up and stuffing your pockets with dollar bills and saying, here, try that again. Here, that was really good. Do that again. Here, that's really good. Do that again. Yeah, okay. You just look, buddy, I can't keep, my pockets aren't that big because too much money now. Slow down. Here, give it to that guy. Let me try this again. You just did this for the homeless guy down the street. You did this for the food kitchen. You did this for the little kids in the children's hospital. You just went out and said, that trade's for the kids. That trade's for that guy down the road there. I'm going to make sure I feed him today. Oh, this trade's for, I'm going to go to the electronics store like Mr. Beast does, and I'm going to buy up a whole bunch of toys, and I'm going to take them down to the children's hospital today. And I just did that in a couple of trades, and I made some money. I've paid my family. I totally appreciate you. Pay your family first. You make this trade for somebody else, and then when that trade pans through, imagine the joy you'll get in your head, the neurology, and what you attract to yourself if you say, I dedicate this trade to that homeless guy I saw the other day, or I dedicate this trade to that cause I saw on TV. I'm going to take that money and I'm going to send it anonymously. So they're not hassling you and stuff. You're going to send it anonymously. You don't have to tell them your name. You just feel good. You say, I did that trade for that person. I probably made a big difference for that kid on Operation Smile who's got the cleft palate and the hair lip. You've now just paid for that kid's surgery, and now that kid can smile and go on with their life in a totally different way. Or you say, I'm going to help somebody with leprosy. You cure somebody of leprosy, $150 for a leprosy pill. I've done all of them. And you can feel good about yourself and say, wow, I help that trade. I can help pay for someone's smile, or I can buy myself a Ferrari, or I can buy this. Okay, whatever. But you just change the kid's life by just Operation Smile. Kiva, another great one to go to. You take all the trades you make today, because today's the day I dedicate to whatever. I'm gonna dedicate it to Kiva. In other words, if I get $1,000 today, I'm going to take that $1,000. I'm going to go onto kiva.com. I'm going to put $1,000 into this account, and then I can see hundreds and hundreds, if not thousands of people who need money to start a business. You can go down into Africa and you can see people that are collecting plastic bottles, old tires that they're trying to use to recycle and sell. They're trying to create they're setting up a little store where they can sell to people. They just need some products. They need somebody to help fund them to get them started, so that, and then they pay you back. And then that money, you can use it again to help some other people. That Kiva thing is an amazing thing. And you did that all today, just trading a couple of candles. And it's nothing. We sit here and you drink your coffee and you're all healthy and happy. But to them, those people, that's a major, major change in their life. So I recommend you do that kind of stuff. Again, that's what you do, what you can do with your money, with your success, with the power that you can see inside these candles. This is absolute crap trading right now. But I just showed you that you can nibble money out of this thing with logical levels, always having your fail-safe as your safeguard, and pay. All this you've been able to collect, all because of that right there. How many times did we wick back into this area and find a rejection block that you could have paid yourself at? 1, 2, 3, 4, 5, 6 times. You've had opportunities to get in this thing and pay yourself at all these rejection blocks along the way. If you're pulling your fib tool, you're still in this one from the original entry we had up here. You're 50%, you paid yourself there, you moved yourself to break even now. You would have come back in, got taken out. Then just pop back in and do it again. I lament about all the wonderful things you could do with this. Anyway, do you drop this gold? Yes, I do. Hi, I'm live in Kenya. David from Kenya! Welcome, David from Kenya. Which episode do you recommend on the 2022 mentorship? Which episode? You're not trying to shortcut this by any chance, are you, David? We don't go to episodes. You start at episode 1 and you work all the way through to the end. You make a whole binder full of notes. You absorb yourself in the information. This is not a short get-rich-quick thing, my friend. You do the work. Do the work. I did the work. I went right back. I paid for it back in the day. And I went right back to the core content. I suggest you do the core content and go all the way through to the end. And then find the next one, like the 2022 mentorship. Start from the first one, go all the way through to the end, and then devour every other little piece of ICT content you can get your hands on. If you're dedicated to working, if you're unemployed, stare at the charts, load your brain, feed yourself first in your mind the skill set you need, and you come here and we'll show you how to apply it. How's that? That's the episode you start on, my friend. That's the episode you start on. Which episode you got? Mechanical engineer. Oh, you're a mechanical engineer. I've got an electrical engineer friend. I tell you, you engineers sure love precision. Mechanical engineering, Muhammad. I can just feel how precise you are right now. I can hear all the little things clicking, the ones and zeros clicking in your head, my friend. Hi, Bomb. Good morning, friends. Hope everyone has had a restful weekend. Yes, it was excellent. Fernando. Don't you guys just want to say Fernando? I just love his name. Just makes me want to... Fernando. And Ricardo. NQ is going lower. Okay, Fernando. You can't just say it's going lower. You got to give me a candle that you're bumping off of, because right now we're getting into, no, I think it's going higher. You see that linchpin? Here's a turn point. We haven't actually swung below a low at this point, and we've got one that's going. We haven't swung above a whole high there at that point, so you're kind of going sideways. But now we've got this guy above here, so now I'm going long. Now it's long. I entered in a small long in the 5-minute fair value gap. Good for you. Good for you. If you're still long in the 5-minute, you're doing well. Yes, I do. It's true, but it's also funny the way you said it. I can't remember what it was I said now. Which episode? That's true. David, thank you, man. I sure will. Good for you, David. David, you've got plenty of people in here, my friend, that are willing to help you out. You never have to rush this. I want you to think of this community as a community of people that care about your success as well. I want to see you succeed, man. I really do. I genuinely do. And if you honestly go and study his material, don't pay for it for somebody else. Do not pay for it. I'm giving away gold here every morning. So go study his stuff. Come here and we will show you. There are plenty of people. You got awesome people on here that are willing to give you a hand, but no one's looking to give you a hand out. We'll give you a hand, helping you succeed, but no one is going to try and keep giving you freebies, man. That's not what I'm here for. If you're here for freebies, congratulations. Take your money and go. Enjoy your free entry trades, your signal service, whatever you want to call it. That's not feeding you. It's feeding you for a day. It's not teaching you. I want to teach you how to fish. I want you to feed yourself, and I want you to feed your family, and I want you to pay it forward. I'm giving it to you for free. I want you to pay it forward. Pay it forward. I paid for it. I don't care. It's still going to make me money. That's why I'm sharing it for free. Though I may make a mentorship that says, hey, buy a t-shirt or something. Maybe want to get a new computer or something. I don't know. So, did we see that this was going higher? Did we know it was going higher? Where did we see it going higher? Where do we see it going higher? Broke through the mean threshold of that candle, closed on the above the mean threshold of that candle, came back to the mean threshold of that candle and left. Pay yourself, rejection block, pay yourself at the high. You see, all this stuff that didn't work out, we paid ourselves. How many times did you get an opportunity to pay yourself in the wrong side of the market? The wrong side of the market, you still made money. If you trade rejection block, you trade the principles that Michael teaches you in terms of premium and discount arrays. What range are you in? And you got to be a steely-eyed missile man to see this. But you trade inside those little ranges that you're in, premium discounts, start collecting. Don't think I've got to get the big grand slam. Take your $100. We took $300 out of the trades over here. How many of you actually made a lot of money inside here? You could make your entire day's wages. Some people's entire wages on their week or month could be made right there in just nothing but crappy consolidation. But if you know what you're doing, you could have got paid all inside that. Anyway, you know what I'm talking about. Pumex, are you taking trades beside stream? I see you trade only on the paper account. Oh my God, it's this question again. Do you guys want to answer this for Pumex? Do you want to answer it for him? I have my live account over there, my friend. What I do on my live account is my business. What you see here. If you don't see what I'm showing you on your live account, don't worry about what I'm doing on my live account. You worry about your live account. I'm only ever going to show you paper. And if that's not good enough for you, you get to move on. No offense. I'm not offended. I just listen to that question. I go, oh God, here we go again. Live trades mean nothing. I've got my live account sitting right here. You don't get to see it. What you're seeing here is what I'm trying to teach you. Focus on this. Don't worry about what I'm doing over here. If what I'm showing you on here is happening on your live account the same way, you make the decision. It does not make me any more credible if I show you what I'm doing on my live account. I'm teaching you some great stuff here. I'm showing you some great stuff. If you don't want to see that, you want to see my live account, you're in the wrong place, my friend. I sell in a order block 1 hour. Derek deletes it. TP external, take profit. RSM, art, take profit external 1 hour. 1 hour external. Oh, right there at that order block. Good for you. ESM. You're right back at the order block. Take something out right there, right at the mean threshold. Look at that, right in there. If you took some out there, solid, man. Good for you. Good for you. And it's a breaker. So I'd like to see a nicer reaction off of this. See, watch this here now. Swing point. Watch right here. Whoever's long, watch right here. You don't want to see it close below that. Otherwise, we're back in this range now. You're looking for premium array, discount array, intermediate array, which is that equilibrium portion in here. We have a consolidation. Run above, come back into consolidation, Cam 1 model. I would prefer more of a Cam 2-ish type model if I was going to go long back inside this range again. But if this is the one you're looking for, look for that inversion right there. Body breaks below it. As soon as it does, pull your fib tool, start trading your 50%, trading your lows, your consolidations, your discount arrays, or your breakers. Oh man, there's so much fun in there. Watch, 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 watch. Follow the rules and the effect of righteousness with peace and the result of righteousness, quietness, and trust forever. Isaiah 32:17. Okay. David, ain't here for freebies. I'll go study, then come back. Well, you can just study and stay here and just watch this. Like study in the evening, but watch how price is delivered in here. That's awesome. Good for you, David. I'll Derek's like, I'll answer it. 5-minute timeout. Don't want to get that genie ticked before the lunchtime macro. Need him in good theta state. Sunday, new day opening gap above us. Excellent, Hans. Excellent, Hans. Commandment. 5-minute timeout for what? All he did was ask a question. Derek's my protector. Derek's keeping an eye on me. He knows how my mind can get. I can get hung up on stuff like that, and I lose my focus. He's my moderator. I trust whatever he does. There's going to be lots of people who are going to come in and they're going to ask that question. Because I think there's an inherent belief out there that people have created, mentors alike have created these, and these people, you get some trolls on the internet that say, if you're not doing it live, they're full of crap. It's like, wow, that's a pretty bold statement. That really is a bold statement. That really is, there's no logic to it other than the fact that they say that they don't trust people when they say that statement. They're saying that anybody who is trading on a demo account cannot be trusted, that they're not invested in it, because then they're not totally talking about trading, they're talking about the psychology of trading, which is not what we're talking about. We're talking about price action. And if what I'm showing you on here is the same as what you're seeing on your live account, and the same things manifest on your live account as they should be, as they're doing on a demo account, then ask yourself, does it matter what anybody else is doing? It seems like a very logical approach. The fact that somebody else is putting money or live money or not on it doesn't change that the algorithm's still going to do what it's going to do. Now you see how this did not trade through? We're looking for a reversal here. It didn't happen. We have a new price leg continuing up. So draw your price leg from there to there and extend it up. And that would be an upside objective. And ooh, does that look like it's going to run back to our, from here to here, and then from here to, I'll take it from there. We're getting close to Sunday's open. I'll just take that off there. You guys get the idea. It's heading for here. Rejection block up there on the hourly. So all these areas, you start looking for a swing pattern to happen now. You say, okay, rejection block. Do I get a swing happening here to come back down? All right, old high takes out that. Okay, now do I look for a swing pattern? Okay, back to Sunday's open. Do I get a swing pattern? Okay, back to here. Do I get my swing pattern? You just keep looking for your opportunity to get a swing pattern for it to break market structure to say, hey, look, I'm heading back down again. Look at the range you're in. Just follow the rules I'd set out for you on Sunday. What range am I in? Pull your fib tool. Use the fib tool as a quick and easy way to manage whatever short range you're in and collect your profits accordingly. So I think this is probably going to come up in here now. This is your turn point. So now you can see how if you're bullish or bearish, if you're bullish on this still, this is where you start getting nervous and say, okay, this could be either rolling over it to come back into a deeper range and you don't get your extension. You're down to 3 seconds, 2, 1, there. Now you've closed below it. You come back up here, rinse and repeat. Stop loss goes up here. And you do your same thing we've just been doing over and over again. There's your first entry right there. You've already paid yourself right there. 1 minute, less than 1 minute, that's like 30 seconds less than 30 seconds, you just got paid. You just got paid again. From there, there's your entry for a short. See how you make money with that? And even if you're wrong and it starts going back up, you just got paid. You just got paid. Now I'm going to take this off because the objectives have already been hit. See how fast you can get paid? 20 seconds. You just collected from there to there, a couple $100. Now you can wait. And if it comes back to you again, a couple $100, couple $100, couple $100, like we did over here, over and over and over again. Same thing here. It builds your buffer up between your couple $100 that you just made there. Stop loss still goes up there. Rinse and repeat. Do the same thing over again. And you collected $300 from the first original one. A couple $100, maybe $400 or $500 you could have collected in here. You just collected again there. And we're all going in the wrong direction. You see how these were all going in the... They were counter trend trades, and it kept going back the other way against us. But we counter trend traded it all the way back to a logical level to collect money at. It comes back again right there. You just got paid to do your whole trade for free. If that taps out right there, now you're back in again. You get to do your trade all over again. And if it's right there, if it's wrong, that's where I would have got in there. If that's wrong and it closes above there, 3, 2, 1, bang. It's above. Now, you get out right there. Now I'd be break even. Now I'm bullish. And you'd be bearish if you get on the other side of this with a body close. You're in a consolidation then. Bullish, bearish, bullish, bearish. What's your overall objective? If it's bullish, then err on the side of bullishness. Right now I'm bullish. You just collected money off of a bearish counter trend trade to a rejection block. You did not get the full low taken, but you did get the rejection block and the low here, but you just didn't get that one. And you came all the way back right to your entry point right there, and you broke even and you got out, or you put a double on that to go long. So 1, you got out, and 2, you got in. Pay yourself at the rejection block. It's a small one. Move to break even and wait. If it takes you out, okay, I just collected another $50, whatever. These are like there's money in front of you. You want to bend down and pick it up. And they're quick, they're logical little snappers that you can snap $50, $100 out of. But you see how you got to have the discipline to be able to do it. If you don't, and you get greed kicking in, the PD array popped in there, it hit the PD array rejection block, and now it's coming back into a smaller range from there to there. This order block here is its target. Premium, discount. Inside that range, you come up to it, you come back to it. Rejection block. Now we're into discount array. This guy, you're between this guy here and this guy here now. Compress, compress, compress. Boom, has to break out somewhere. Back up inside here. See, it snapped it, hit it, bounced back down inside that fair value gap. That's going to make a move. You wouldn't trade any of this. It's way too tight now. So you wait for a breakout. It's more bullish, so anticipate more bullishness. We're still bullish. We're back inside the trade. We have not closed below it, so we're still bullish. Until proven otherwise, we're bullish. Chris Ali, 5-minute timeout on what? Okay, at David came in. No. Milk Darren for all you can. He seems to enjoy it. I don't even like the way that sounds. It sounds terrible. You don't milk me for all you can. Just ask, man. I'll offer it to you. You know, I'm not a cow. You don't have to milk me. Kokoro, you're doing a great job. I'm in a 2021 I am a 2021 charter member. Love your insight. Thanks, Kokoro. Peace, Derek. peace, Derek. TR mentors need mega patience. Monitors insulation of the question. Question might only be 5 minutes. 5 minutes is an attention getter only. It's crazy. Pumex. And that's not nice. I got blocked for a question. I was only thinking, is Wave Trader trading live account while tape reading on the stream? Yep, I am live account over here, Pumex. That trades besides. Yep, come on in, Charlie. Hello.
I'm going to head down to Costco for my exercise.
Oh, okay. Sounds good. Okay. No offense. I'm not taking any Pumex, any offense, buddy. It's totally cool. I'm cool with it. Stoic Jack, I need advice on trading these 5 evaluations, 150 and 450K. Any advice on how to trade them? I'm not sure I get your point there, Stoic Jack. Not quite sure I get your question. On evaluations, which one should you take? If a 150 for whatever you're willing to pay for, I guess. Nothing. It doesn't trade whether you're using a $5,000 funded account, $50,000 or $150,000 account. It just means you have to pay more for it, right? But if you use the same principles we're teaching you, because we're bearish now, you see the bearishness? See the swing point? We've gone above an old high. We've now inverted. We've gone below it. Trade back to it. Get short. Right there. Now we're bearish. How do traders pay tax? Legit question. Usually you have to declare it with your government, obviously. You should declare it with your government, because if you don't, they're going to get you. They're going to catch you in the end. A lot of these companies have to register with your government in order to say, hey, look, we've paid XYZ X amount of dollars. And whether or not they have to register, I don't know. But there's a lot of countries that can't participate in it because the governments won't let them. So there's your entry again, short. Look for your rejection blocks. Pay yourself. Move your stop loss. Pay yourself, pay yourself, pay yourself. Let's start getting down here now. I can't give you advice on which one to pick there, Stoic Jack. That's entirely up to you. If you trade the principles, it won't matter. How do traders pay tax? Stoic Jack, while you trade so many accounts, if you don't have an idea to do this, for me, it's like gambling. Yes, I agree with you, Pumex. If you have a ton of accounts, you either trade one account up, otherwise you're just gambling with multiple different accounts. You don't trust your setups. Pick one. Have one funded account and treat it with all the focus and attention, with your focus on the live trading. There you go. Boom. I hope you're paying yourself, people. I hope you're paying yourself. I've given you multiple setups this morning. That's a nice little zap on a carrot. I love that carrot. So yeah, Stoic Jack, you got to just plan your trade your plan. Don't worry about all the different accounts. Find one, trade your plan. If you're doing it right, you only need one. Unless you want to do the same thing on 10 different accounts, then you have to try and keep track of them all. And if you want to manage that, it's good on you, man. Good luck. So yeah, I have a live account over here, and I have you got what you guys are seeing is my just demo account. So you don't see what I do on my live account. But you can guess that if I'm showing you something on here that I think is going to make money, not that I would, I'm telling you to trade my trades. I just want to show you price action. You guys make the decision. It's your money. Do not milk each other, guys. That sounds gay. There's nothing wrong with gay. If you're gay, I've got no problem with it. I won't even go down that avenue. But thanks for the info, bro. You're welcome. Oh, Commandments gave you that, Kate. Stoic Jack, size. Tax. Talk to the tax expert, not us. Yeah, the tax expert. Talk to your accountant, and they'll let you know how you can manage income that comes in from this, because it is declared income, and you should declare it. You should absolutely declare it. Otherwise, if you try to hide it from the government and they find out, man, you're going to get punished. Depending on what country you're in, that could be quite brutal. Do not, Muhammad, do not do this, but with crypto, you can run away from taxes. I pay my taxes. Yeah. Don't even give advice like that about running away from anything. Just pay your taxes. If you're making money, you do your part to contribute to society. You may not agree with the governments and stuff like that, but you're paying taxes to help keep the roads going, the infrastructure going, and all that stuff. Don't avoid paying, because it's like saying, I just want a free handout. I want to live in a society that affords me all the luxuries that society can give me, but I'm not willing to help society grow by not paying taxes. If this stuff is making you money, pay your taxes. Pay your piece to help society. You may not agree with it. Vote if you want to fix things, but pay your taxes. Do your bit to help the world out, to contribute to the society that you live in. That's all I can say about that. RSX, 4-hour fair value gap to ERL. 4-hour. What is ERL? I'm not sure what that is. Do you have one settled R to R, like 1-to-1, 1-to-3? You take what the market offers you. I take what the market gives me, my friend. I have no R to R. You'll see me. My stop loss is there. That's just a ripper. I use my fail safe, and I just trade to levels, and I scale out, take my money, move it to the side, because it happens all the time. I don't have to have a R1. To me, when you're trading R1, and I don't want to shoot down anybody who's using that R1 method, R3 method, or whatever. If you have an R to R method, then you have an expectation through PD arrays, like here. Let's say you're going short on this right here, and you had an R4, R3 is your standard draw, and it does not even give you R2, but gave you tons of opportunities to make money, and you go woof right against you, cleans you out, and you go, oh, that's stupid. This is a shit environment to be in. Really? I just showed you how you could make hundreds of dollars inside that environment trading array to array. My arrays are my R1s, R2s. When you have a rigid R system, and this is how I think about it, if you disagree, you're totally allowed to. When you have a rigid system, you force yourself to say, I'm expecting this, and I ignore all the PD arrays that I could be bouncing off of that would reverse and take me in the opposite direction. If an R3 is right where my market would say, no, I'm going in the opposite direction, and it breaks that, and you don't see that because you're expecting an R3, you're rigid, and you fail to see the turn point, those R models have no purpose for me. If I go, I'm inside this range, that's a discount, that's a premium. If I'm looking for a discount, I want to snatch, is it worth it for me to go there? My stop loss is up here. I'm risking more in a stop loss than I am in the little piece I want to get out of it. I won't bother. Unless you're super confident about the algorithm and you go, no, I don't think it's going to pass by that candle. My stop loss is right there. My fail safe's right there. I'm going to get this quick little run to here. I'm going to take some money out, slam up against break even as quick as I can because I'm expecting it to go there. That's when when you read the charts really cleanly, like when you were in here, for example, and then you had the opportunity to get there and you took a piece here and moved to break even, took a piece there and then moved to the one below it. And then Then all of a sudden you said, okay, now I'm getting down to my discount array, which is in here. You hit that, come to your next one back here. Just trail it up behind it. So that one would have still kept you in. You'd run to the bottom, go to the top, run to the next one, run to the one behind it. And you just keep trailing it behind it. No different than you would with the fib tool. And as it comes down, if it comes back and takes you out, you go, okay, I don't care. Now I'm going in the opposite direction. I've swung below a low. Here's my reversal, right back into my low. Stop loss goes here. If it fails right here, comes back and goes short, I break even. I use my fail safe here. And now I'm in a new range. And I say, pull my fib tool from here. When it hits 50%, scale out a piece there, move to break even, rinse and repeat over and over and over again. Like right now, you see how it's starting to gap down? I don't like gap downs. We're already into the rejection block. So for me, I'd be like, I'm out. I would take that one out of there. Even though it traded above that, came back, give you an opportunity to get long. As soon as it gapped down like that, I don't like gap downs. I'd be out. Move for the silence. I don't care. Made a whole bunch of money coming down. That stop loss doesn't even get taken. If that runs all the way on me now, again, I don't care. There's a much cleaner setups. I don't want to be wrestling myself over a trade that I'm trying to force myself to stay in, unless it's a clean setup like this, and you go, bing, it hits you in there, your stop loss is hitting there, and it takes off, takes that low, slam, I go right to break even, and I collect a piece there. Zero stress trade. If I can get into a zero stress trade right away, I'm going to do it. I'm going to do it. So you see that gap down? I didn't like it. Now it's trading back up. Now I'm in profit. You would be in profit again, but I got out. So I'm not going to sweat that. I don't care. This happens all the time. You've had multiple times in here. You saw this one. You saw this one. Multiple times to get in. You get out there if you thought it was going to go long, which would be a valid place to say it's going to go long, till it broke below and you go, okay, get back on the horse again. We're going short. Broke down, come back in. You're in. Reinforced. You take your profits there. What you lost right there for going long, you made back right there, plus extra. Now you're really laughing because you're really cleaning house. And I wanted to go long. Remember, I don't like the gap down. I'm out. Would have taken me out had I looked for this. But that's just how I like to read my price. Now I've run below here. Now if it runs up above here, I start going, now this could be delicious. If we get above it, come back to it, then go long again. If it doesn't, yeah, whatever. We'll wait. I don't know, just this couple hours we've been in here this morning, I've probably given you a couple of dozen setups that you could have taken. All right? So I hope that you understand why I'm not a R1, R2, R3 believer, because I think you're teaching yourself to get greedy for PD arrays that may be out. 1 or 2 PD arrays outside of your range is all it takes for you to blow your trade and be on the wrong side of it. Just 1 or 2 PD, one PD array too far is all you need. And the rejection block versus old high is a classic example of 1 PD array too far. You thought you were aiming for the high, hit the rejection block right here, right there. Hit the rejection block. You did not get the high you were looking for. Slam right back against you, and you were like, ugh. It did not take out the high. Well, of course, because it broke the downside, and you should be, ooh, linchpin. I'm on the wrong side. It's going short. This is gold, you guys. It's absolute gold if you just want to stay on a horse. Now, this is a 1-hour chart, 5-minute chart, 1-day chart. If that was a daily chart and you saw that and it come back into that, would you guys be looking at today being a bearish day? And it slams down and you catch a bearish day right there, right off the inversion, and you allow it a little bit of play room. You're putting your stop loss above here. You give it some, and then all of a sudden it takes off on you, closes below yesterday's low. Slammo, you move to break even. Pay yourself. Pay yourself. Then you look at the range you think, and you go, holy smokes, This is Monday, Tuesday, Wednesday, Thursday, Friday. We just got a massive rundown for a whole week back into this breaker down here. Huh, what a delicious day. What an excellent week. Because you learned how to do this on a 1 minute chart. Yeah, I have still 3-to-1 RR, and sometimes I see partials that I should take. But then I take it and it's not calculated in my plan because 35% accuracy doesn't make me profitable. Ah. Well, you just saw right here accuracy that is exceeding 90%. Now, how you use that accuracy in terms of how you build a setup around watching charts on a 1 minute, we're calling 1 minute candles here every minute, and we're picking the direction and we're getting it right. So we have a really high accuracy rate. Now you have to develop a trade plan around that kind of accuracy, and you have to trust it, and you won't give a shit about RR. You won't care about RR. HS, welcome. Oh, hey, what do you mean with the linchpin? Ah, okay. What I mean by linchpin is this. So if I'm in a premium array way up here, the linchpin for me is if I want to go long, this has to hold price, because right now I can see this is a break-in structure to the downside, and I think this is the potential to run down. And I also see this right here, and I go, oof, I've swung below this low right here. This is the potential swing to go higher. So now I go, oh, I'm going higher right here. And I also have one that says I'm going lower. They're overlapping. So it becomes a linchpin for me. I say, depending on where this settles, if I go above, I get long right. You'd have to go long right here. Because if you're wrong and it trades below on a close like this, then you go, I'm wrong. Trades back to me, I get out at break even and I go short. Because the linchpin says it's the point where I'll fail or it will hold it together. That's what a linchpin does. A linchpin holds something in place, and if that linchpin gets pulled or broken, the whole thing collapses, or it finds the support that if that linchpin's pulled, then it all falls apart. That's what I mean by linchpin. It's the one key area that is going to hold either a run higher or going to support a run lower. And that is determined by where you break it and how you break it. And if you break it to the downside, you're wrong. If you break it to the upside, you're right. If you're going in a bullish direction, you constantly look for how we manage either side of that. And you trade the opposite. Now, go into my Sunday session and you'll hear me talking about fail safes. You notice our stop losses hardly ever get hit. How many times do you guys get your stop losses hit? Hundreds of times? I'm showing you, or I showed you something on the weekend that will teach you a tool that your stop losses don't get hit 90% of the time, because the market, you recognize the market's changing direction, and you break even and get back on the other side of it by looking at the linchpin, that inversion fair value gap at the key spot inside an array, blah, blah, blah. There's a bunch of other stuff that I'll look for first, but that's why you hear me saying, oh, no, I'm bullish. Oh, no, now I'm bearish. Now you're going to get some support off that. Is this a key time? Oh, look at that. Remember we're talking about up here? I said you're looking for those key points. Remember when I said go back through the tape? You'll hear me say it. Tape. How's that old school, hey? Go back for the digital recording, and you'll find I'm looking for a reversal occurring at the mean threshold of this breaker. Doesn't work. Now I'm looking for a reversal to happen at the rejection block, because I may not take out the highs. Oh, look, we didn't take out the highs. I'm looking for a rejection block. Oh, I'm looking for my reversal pattern. Oh, here it is. But I also have one that says continue on. I'm going to wait. I would like to see it reverse right there. Ah, now we've got it broken from there. Now we get to go short. Right? You always look for your next level. If you study your PD arrays here, these make sense because you'll know what you're looking for. And then you say, that's my higher time frame. Now I want to go to my lower time frame and find my entry. And when I find my entry, I'm going to start hauling money out as quick as I can, because I know I can be in these consolidated environments where I could get beat up. Could you get beat up? Absolutely you could. But if you use your principles well, you can make money in freaking crazy, crappy environments like this. This is high resistance. And I showed you how you can make money inside a high resistance liquidity pool. Inside a consolidation. Inside, how many people could teach you how to trade inside a consolidation? Anybody who studied ICT techniques and shows you, I'm nobody unique here. I'm just showing you Michael's stuff used with precision, even in consolidated environments. That's how solid his teachings are. That's how solid Michael's stuff is when you can stay on the horse in any environment, even in high resistance crap like that. Okay? This makes so much sense. ICT also said it still RR, and it looks like he is trading without still RR also. But some of his students said it must have. Some of the students like Paladin said it must have an RR. No offense to Paladin. He's not looking at, or she's not, I don't know who Paladin is, but whoever that is not trading PD array to PD array. You're trading a setup that Michael teaches you, and you're going for the lows. Like if you say, Michael says, okay, I'm entering in here and I'm going to go short. I'm aiming for these lows down here. I say, okay, that's fine. If that may be your objective, but you better be preparing yourself on the way down, and you better be watching these PD arrays, because if it bounces off of this breaker here and then takes off again, you won't get your low. What if it only hits the rejection block and you don't get your full scale out, and then all of a sudden it reverses on you? You give up all those profits. Well, I'll tell you, I'll stay on it. I'll see it all the way down. I may lose, I may close out more of my trade. You may get an overall price guarantee, like you may make more money than me overall coming down, but I guarantee you I'm going to see when the market switches directions way before you will, because you're trying to trade an R factor and eliminate all the possible places that it could turn on you. I like to follow it down, watching it every step of the way, and when it reverses on me, I'm out. And then if it continues down, you make money, I don't, or I made my bit, I don't get the full payout. I don't care. I just wait for my next setup. And I get back in and do the same thing again. Now, is it more edifying for you to be in a trade that pays you right there, and I nailed it? I killed it? Yeah, good for you. You skipped a shit ton of PD arrays. As far as I'm concerned, you were gambling beyond that a certain point, because you couldn't say for sure that it was going to go there, unless you're looking at a 5-minute array going, no, my 5 minutes says I'm going to go over there because I'm trading on a 5-minute chart. I trade on a 1-minute chart, so mine changes up a lot more than yours does. Like I think somebody said earlier that Muhammad, I think, said he was bullish, and I'm like, no, I'm bearish. And that wasn't until it broke above, and I go, okay, now I'm with you, Muhammad, I'm bullish. And he was like, yeah, I was already bullish 5 minutes ago, 10 minutes ago. And he finally hit his objectives, if that's what he's aiming for on a 5-minute chart. So whatever chart you're on, trade that. This would just give you an indication. I'll throw you off your game by telling you that markets are turning. If you're on a 5-minute chart and it's still saying you're going bullish, and I say, nope, it's going bearish, it is on my chart, not yours. And then if yours finally goes bearish, I got it a long time ago. So there's a trade-off. Who makes more money in the end? Who gets to cash out quicker? Who gets to stay in the charts if you play PD array to PD array? And none of it makes any... I don't ever think about it from an R1 factor. I just look at, how do I protect my investment? What's the quickest way I can bring that stop loss to break even? As soon as it breaks that go, no go zone, I know I'm going to be, so I don't even need to have it sitting up there. I can slam it to here, because if it breaks back the other way, I know I'm going back up. So my stop, I'm going to take a piece off and move my stop loss to break even. I got to move into zero stress as soon as I can. Got to move into zero stress. Thank you. Looks like I will be here much more often, Pumex. You're welcome anytime, my friend. You're welcome anytime. I think Paladin suggests this because too many people don't assess the risk and reward of their trades before they take them. So he wants people to assess that, not look 4 to 5 handles, take profit to a 20 handle stop. Good. If that's what he's doing, then that's what I'm trying to show you here, right? I'm trying to show you, take accountability for every candle that forms. If you ignore every candle that forms, you are ignoring essential PD arrays that could support or crash your trade. If you don't have the discipline to stare at a 1 minute chart and look for this stuff and practice, when Michael says practice, this is practice. This is practice. Every candle we watch, every candle. Look for the range and keep playing this over and over in your mind. You guys will get so damn good at this. You'll start up your own little websites and your own little things. You'll call yourself a genius, a guru, whatever you want. Hopefully not. You'll just pass it on. You just share the knowledge with somebody and you're not out charging people for it. You pass it on. And if you charge, I understand. You got to make money. If you invent this thing called the fail safe and you say, hey, look, man, it's mine. Darren doesn't know anything he's talking about. I discovered this. I don't care. If it makes you money, it makes you money. I don't care. I'm not going to chase people for ideas I come up with. So how we're above this little area here now. We've got a swing point and we've got this inversion. We've broken above it. And we come right back to it right here. Dink. That's where you get long and you wait. If it breaks below it, comes back into it, you go bearish again. You just came back into a optimum trade entry inside a higher range. Take your first swing. 62%. See, right on the money. So I want to see this give way. I want to see it come down. This is order block validation. So if you have your 62% retracement to go short, next price leg down, look from here to here, extend that from there to there, and the carrot should give you this run. If it doesn't and starts trading up above this inversion here is still holding price. So I want to see this give way for the downside. You want it to provide support to the upside. Look at the range you're in right here. See this little swing that's happened here to here? Start comparing your candles. That candle's now been validated and you're back to this one. So see how you're tapping it? You're inside here right now. How many people saw that you're inside those two candles? And you're looking at that array and that 3 different arrays on that candle and 3 different arrays on that candle. Then you have your rejection blocks. Then you have your wicks. Multiple PD arrays right there inside those 3 candles. It's got to decide which one it wants to go to, which one's it going to bounce off of. Premium and discount, premium, poof, till it finally pops out of somewhere. Or decides, I'm going to run all the way through this now. I've come back to my inversion. I found support at it. I want to continue higher. If that's the case, pull your fib tool and trade your 50%, 62%, 79%, and you're moving your stop loss up behind it. Again, go to the Sunday's lessons and you'll see the multiple ways to trade inside a range with your fib tool off of a confirmation candle. Boomex, you'll definitely learn watching Darren's live stream. VT, GBP, USD. Are you asking me? Or you just suddenly blurt that out? Is it like a Tourette's thing? You just start, GBP. You're asking for me to go over there, I hope? If that's what you're asking me for, sure. Okay. See the swing below the slow here? Good. What you're looking for now is you want to see this area right here break to the upside on the daily to go higher. Now, which time frame do you want me to, VT, where do you want me to go? What time frame do you want me to go on to? Where do you want me to go, VT? VT, where do you want me to go, buddy? What time frame do you want me to trade on? Look on. 4 hour, 1 hour, 15 minute, 5 minute, 1 minute. If you want 1 minute, let's do a 1 minute, just because we love 1 minute. It's a beautiful candle. Here's your swing point at a time of day. Look, 10:30. Look at that. Run down right below that low. Trade back up into it right there. Oh, did you catch it? Did you catch the glory of the run below the 9:30 low? And you had your draw. If you took this one here, that's your drawdown right there. And the moment you break that low, your stop loss up here, salamo, right to break even. Right there. So as soon as you break that low, it comes back up and you stay in all the rest of the day until you get what Michael will be saying. I'm going to aim for these old liquidities sitting down here at these equal lows, and then it finally gets cleaned up right there, but you don't get that low. See how the reversal happens? You get this low, but you don't get the rejection block. All you get is the rejection block there. You don't get the low. See that? Stops just short of it, and then reverses all the way back up and almost takes you out. And then comes all the way back down and gives you one more attempt to try and get out. But did you see this? Did you see the multiple opportunities to get long again? Right here. We have swung below old lows. We're waiting for a break above market structure. It closes right on it. Oh, you don't get in short there or long there. You wait. Then all of a sudden it comes back. You take out another low right there. You go, oh, I want to go long. I want to aim for old highs. And it goes, already hits those old highs. You go, oh, well, here's a reversal. I've taken out an old high. When it gets a reversal now, because I took out a high, I'm not looking to get long anymore, because I've just taken out an old high. There's my reversal pattern. Trades below it. Oh, look, I get to load on some more. Oh, I get to hammer down, take that low. Ah, deliciousness. Deliciousness, my friends. Because you were looking at this to go long, and you go, wait a second, it's already taken out the highs that I was aiming for, and it's now created a, oops, it just drove all the way through me, like right there. If you're going to go long right there, it came back and got you, and all of a sudden it goes boop and starts trading back against you. You go, oh, now do I wait for it to go here? And it just goes, rips all the way through. Your stop loss is down here. Don't forget, you always put it below the low. Here's your fail safe. It goes all the way down. You go, oh my goodness. It stops right here, and you go, it's going to take my stop loss. You either get out there, whatever your rule is, or you wait for it to come all the way back to your inversion again if you're wrong, because now you're looking at this and you're going, oh, I'm on the wrong side of this. This is swinging. I'm on the wrong side. You know what? When it gets back in here, I'm going to use this as my entry. So I was one long there. You do this. This is what smart money does. It has the big billion-dollar, multi-billion-dollar banks can afford to go underwater. So they're taking their longs, the people who are going long, they're taking those longs, they're going underwater with them. They're coming back, they're offsetting those longs to go short now. And now they go short right off of that inversion. So if you're one long there, you put two short there. If it comes back to you, it goes click, click, takes out your long and puts one short there. And you start scaling out. That's being a little more advanced with your trading. And that's being a lot more confident in your PD arrays. Because if you look at this thing here, you say, okay, well, that's the last down, close down. It's a breaker. I'm expecting it to be strong. The mean threshold is the critical part, which is right here. There's your mean threshold. It lands on it, comes back up, gets you out, gets you in short to continue down. How's that for your GBP, my friend? 4 hour, 1 hour. Okay, sorry, that was one. Sorry, I gave you your 1 hour, 4 hour. Well, reprice, rebalance. Comes back into reprice, rebalance. If you don't know what reprice, rebalance is, go to the ICT index, and he describes what reprice, rebalance is. You get back in here. There's your takeoff for your long on a 1 hour chart. You come back into CAM2 model, consolidation, CAM2, off a breaker, run above a high, expecting that to provide a level of support. go long, running for a fair value gap, old order blocks, consolidation, you broke above them, find support, either continuation on the upside. We've got this filled here. You're looking for that breaker right there. Upside, you're in a kind of a waffly place right now. You're still supporting a further upside down. So if you were stop loss down here and you're above that high, you move to break even. Take out that high, you move to here, because this is your reversal. If you're wrong and it comes back into this, you go short, right? So that's your fail safe in here. If you don't know what a fail safe is, follow along or go to my teachings I did on the weekend. I show you how to do a fail safe, and that's where your fail safe, not your stop loss. Your fail safe now is your trailing stop loss. It's a dynamic stop loss. You wouldn't go long on this, or sorry, you wouldn't go short on this right now. I'm still bullish till proven otherwise. And unfortunately, you have to lose a lot of liquidity out of your trade to go to prove this is going in the opposite direction. So right now I'm bullish. I'd pay myself above here. I'd pay myself at this point here, move my stop loss right up to there, and I wouldn't even let it get into this. I leave my stop loss sitting right below at the top of this high here. If it comes down, takes me out. I take my money, move to the sidelines and wait. But that's just me. If you want to go for higher prices, if you're looking for all this up here, you think it's going to go up there, you're crazy. That's a great way to stay on it. If it is, stay here and wait. If it breaks that high, then move up to here. Wait for your next fair value gap. Use your fail safe at the next fair value gap, and then the next fair value gap, and then the next one, and next one, so on and so forth. Like you would if you were in this one. There's your rejection. There's your reversal. The reversal happens right there. Body closes below it. You trade back into it right here. Now you get short. You wait for your first fair value gap. It's right here. The moment you get below it and you continue here, your fail safe moves to here. In other words, you don't want to see it break this high here to go short or to go long. So you always want to be in the one above. Either you can put it here, here, here. I don't care where you put your stop loss. It's entirely up to you. And then that one breaks and you make it to the next one. So you now move your trailing stop loss to here, or your fail safe to here, or here, and you wait. And if it breaks that side on the way up, for me, I'd be going, well, you know what? This all looks delicious. I think I'm going to stay in this. And I'm really looking for a reversal to happen below a swing point. Then I look for a reversal. So you stay in it, you take that, you enjoy these beautiful, delicious run down, and it takes that low out and you go, all right, this one is definitely a fail safe. I'm going to move my stop loss to here. If this fail safe now comes back up and we trade above it, I'm on the wrong side. I've done a swing below a low. This is my reversal. It does not give you that because your body doesn't trade above it. We continue down and away you go. You got the next one and the next one, the next one, the next one. Then all of a sudden you get this reprice rebalance and it goes rip all the way through it and you go, ooh, I've gone through a reprice rebalance. You treat this like a fair value gap. It comes back inside. You get out right there. Because your fail safe is always at the one behind it. So right there, oh, I might have taken you out right there if that's where your stop loss was. If it's not, if that doesn't take you out there, oh, sorry, it has to be a body close above that. Sorry, a body close above here. So that was your body close. As soon as that one opens, you trade it, you close out here. My rule is I'd close out right there. But if it does trade all the way back into your inversion again, you close your profits out down here and then you start your new trade on the way up. You can literally go in and out of a trade with a failing stop loss or your fail-safe stop loss. It can get you in and out at the same spot that you're trying to go, okay, I'm wrong. I can also be right if you want to take the trade. Now you have to trust that. You have to be in the demo accounts, trading this minute by minute over and over and over again to prove it. So that's what you'd look for in your GBP on a 1 hour chart. Hopefully that helped you, my friend. VT. I did enjoy yesterday's session. Thank you. Hiron, thank you. I'm glad you got it. Market Maker X model 1 hour, how to trade it. Go study ICT stuff, my friend. I just showed you how to trade the 1 hour. If you don't understand what the failsafe is, that's just something I've added to my trading philosophy to stay really tight with the markets. It's my leather seat on my horse, and I cinch it down tight. And I like that bull, right? Where you wrap your hand around your hand and the top of the nubbin on your saddle, and you hold on tight, and you literally got your arms strapped to it. That's my fail-safe. It keeps me in there so that I'm bucking, I'm holding on. That thing can't throw me off. That's my philosophy for my fail-safe. And I watch every candle, and I look for the PD array that's going to pay me. I take it and I slam my stop loss up against break even, and I run with the bull till I get my 8 seconds, and I win my race. Then hop off the bull, or you keep riding the bull till he gets so exhausted and walks back to the barn with you still on his back. That's the ultimate one. All right, I got 20 more minutes. We're in the lunch hour here. Anybody have any questions before I head her out for the day? I think I've given you guys 100 or so freaking trade setups today that you could have played with. Hopefully you guys got a chance to see that. If you like it, what we're doing, smash the like button. Lets me know that you appreciate what we're doing here. And if you see some logic in this and you want to investigate it more, subscribe to our channel. And if you really want to have a chat with some people who are really dedicated to understanding this stuff, you can join our Telegram community. All I ask is that if you're joining our Telegram community, we're there after hours. We have chats after hours. I like to trade Bitcoin after hours. So I'll usually put Bitcoin charts up there where you guys can see me trade Bitcoin. And sometimes I sit down and we do a one-on-one session with somebody who needs a little bit of help. If I've got some time, I'll pop in there and help you out. There's guys in there and ladies in there that are awesome at helping people out, and they're willing to help. So it's a great community. If you come in there trying to peacock, be rude, if you start shooting other people's ideas down, you're gone. You're gone. We're trying to build a community that helps people. So if you're one of those people that are inclined to just be rude or cold or insensitive, you're gone. I don't tolerate that. So if you have problems being that kind of person, it's not the community for you. So I just do me a favor and don't even bother popping in. But if you're caring, you want to help people, you want to be part of something that's growing and helping people shift their lives and shift the lives of other people, join the community. There's great people in there. Great people. Everyone in there is great. So pop in, say hi. And you'll see that in the link in the description above. It says Telegram. Pop in there. I think we got over 100 and some odd people in there now. I think it's awesome. Caesar, how long does it take before it clicks? I'm in a boom and bust cycle and I can't get out of it. Ah, yes. You know what? You know what's so great about this? And hopefully you saw this today. I want you to ask yourself a question today. From what you saw me showing you here today, on a 1-minute chart, do you think you should really give a crap about whether the market booms or busts? Did I give you buy side? Did I give you sell side? Do you care? In fact, the more volatility that's in the market, the more you get to ride the great wave. Can you see the importance now of when you put stocks in? When you buy a stock or you buy an ETF that's paying you your dividends and stuff? On a $100,000 account, let's say you had $100,000 you'd saved over a lifetime. What I've just given you this morning, you've earned at least 1 or 2% on that just this morning in just one day. And your bank's trying to give you money over the course of 10% for the whole year. I just showed you how to trade a high resistance liquidity run and stay on the horse. To stay on the bull, stay on the bear. When the bear turns into a bull, you jump on that and you ride that while it tries to flip you off. Catch some bucks, move to the side, catch some bucks. Have your fail-safe. Always protect your money. It's not gambling if you know where you're going and you know what you're aiming for. Saeed Mohammed, welcome, and Tabat Benadia, whatever, that's a really cool name, joined. Welcome. Welcome. I can't even pronounce that second one, but welcome to the community. If you've got a quick, easier name there, I'm going to call you Tabat. Tabat. Tabat Ban. That's a cool name. I'm going to have to work on that one. If you can actually, there's a recording in there. If you can actually say your name properly, I want to respect your name. If that's the name you like to go by, I want to respect that. Otherwise, you get a nickname. Everybody gets nicknames. And I don't mean them to offend you. Please believe everything that I do is just from my heart. I honestly don't want to offend anyone. I just want to have fun with you. So if you get offended by anything, just know my intent is never to do that. How long does it take before it clicks? It could be months. It took me years for it to finally click in. But I'm 58, so my mind is a little slower than everybody else's. I've got guys in here. I got 77-year-old people in here that are just totally dedicated to learning. I got Terry. He's from England. He's amazing. Just constantly in there learning. Never-ending cycle of learning. So I totally respect people like that. It'll click. You stick in here, Caesar, you'll see it'll start to click with you faster and faster and faster, and you'll start to see things that are so much more clear for you. I reached out in the Telegram. I didn't get a reply back from you about what we spoke about last week. What was that? Did you reach out recently? Direct message me in there, because sometimes there's so many chats that go through, I might miss your question. Just DM me in the Telegram, and if I see it, then I'll reply. Julian, man, took a quick nap. This grinding got me snoozing. Kenneth, God bless. Have a great day, and thank you for your continued work. Mohammed, that is me. Oh, that's you, Mohammed. Okay. Oh, that's all one name, Saeed Mohammed Javad. Oh my goodness, that's an awesome long name. That's a lot of consonants in there, man. A lot of vowels. Good for you. I thought I had a long first name, second name. XDD. Tabatania. Tabatania. God bless you, sir. I didn't know how to direct message you in there. I'll DM you and you'll see it pop up. And your invest, what's your name in there, invest? Or is it just invest? I'm just looking in here right now. Do you have a specific name in there, or is it invest? Victor, Jack, Neo. No, I don't see an invest in here. FX 189333 JPT joined the group. Welcome, JPT. He's obviously a charter member. Welcome. Watching your videos made me realize that I know ICT, but I actually don't know how to do a proper money management. Money management's critical, right? It's critical. See how we've got a swing point here? Now I'm bullish. Consolidation. Cam model 1, cam model 2, cam model 3 with a reversal. Cam model 1, enter, take your highs, pay yourself. Cam model people, pay yourself. If this comes back into here, cam model 3 people, stop loss goes down here, same kind of principle. If you're into the reversal pattern versus your cam model 3 people, cam model 3 are looking for here, cam model or the reversal people are looking for, if you're looking for the perfect entry, it's right here. If it fails, comes back, tags you out before it takes your low, you know that's the reversal. You've now taken a high. You see that? You've taken this high. This becomes the reversal pattern here to go lower. So you see how this one says to go higher, this one says to go lower. This one has already accomplished its objectives. This one has not even, so right now we're still bullish. Until we get on the other side of this, through this, that becomes the opposite for a short. It becomes this. So you can see how these overlapping ones are these overlapping ones in reverse now. This one supported that one. This one supports higher. Julian, your years of experience, have you seen that if the market doesn't move towards the fair value gap on the 15-minute, it doesn't expand? It doesn't expand sufficiently. I don't know. I don't compare it on a 15-minute. If I was trading this, what I'm showing you now on a 1-minute, if I just did that on a 15-minute chart, I'd be doing exactly the same setups that I'm showing you right here. Nothing would change. What I'm showing you here, nothing changes on any time frame. Absolutely no other time frame. The other time frames in the future, I would use this one to give me my precise entry for a specific spot I'm looking for up here. Like we were looking when I was mentioning it here when it was coming up. I'm like, look here, look here, look here, look there for your swing point. It was right there. Did you take it? Did you get in? Did you get short? Did you cash out on the way down and pay yourself? Did you move your, did you pull the fib tool, or did you pull, did you manage it with a fail safe, or did you just leave your stop loss there and you're aiming for way back here and you're willing to let that sit now for the rest of today and tomorrow for another run back into here? Like that's your high of the day. I'm good. I'm out. I'm going to move myself to break even. If I'm wrong, my trade didn't cost me anything. I just waited all day for a big old run down here. That's all multiple different trading styles I just gave you there, and risk tolerances. And it's all for you. It's almost like saying the trade setup that I show you, if it's viable on any asset class, any time frame, it's more solid than someone trying to form fit something to a specific market in a specific time, trying to jam in. It's quintessential, like saying, or tantamount to watching a bucking horse run around a ring, and you're sitting on the fence and you're trying to jump on that horse, and you get on it and you go, yeah, my method, and all of a sudden it throws you off, and then you climb onto the fence and you wait for it to come back to you so you can jump on it again and say, I've got a great trade, it works perfectly, but it's only in this time frame, only on this asset class and this specific time. Then you're just waiting for the horse to come around so you can hopefully get back on it. Or wait for this thing that I'm showing you here works on everything. Everything. Don't believe me? Go try it. Go look at it on all your charts. And if you have a chart that it doesn't work on, bring it to me and I'll analyze it with you. And I'll show you where that works. It's literally usable on anything. That tells me that Michael's taught us something that is valuable beyond what you can even imagine. And believe me, you'll start to imagine more and more and more possibilities with this stuff. See, now we're back into that reversal. Now you want to go bullish from that point. See how we've just come back into it right there. That's the first one. Second one, optimum prime right there. where your fail-safe will work perfectly for you, provided it doesn't just rush through and take you out. If it does, it does. It's the nature of the beast. Sometimes you get paid, sometimes you don't. Right here. Now, if you're in, here's where you do the buffer thing. We've talked about the buffer many, many times. Pay yourself, pay yourself. You get your opportunity to keep collecting. So what do you want to do? You just got taken in here. Where's your buffer? I'd be like slammed right up to break even right now. Pay myself here at that order block. Pay myself at the rejection block. Pay myself at the high. And I'd be trailing this sucker up behind it. Collect your money. If it comes back inside here again, you get to do it all again with a pocket full of cash. And if it takes off, who cares? You just paid yourself some money. Don't get greedy and say, I should have been in that. Wine, wine, wine. Celebrate your win. Look at that. Right at the rejection block. Snap. Oh, right there. Precision. You just got yourself some more cash. Now if it comes back here, you get to do it all again with $200 more in your pocket. I don't know about you guys, but those people who just bought into that and they're waiting for this big, they're sitting there going, yeah, I may get that one day. And then all of a sudden it turns against them. You go, oh, how come you got $200? I was in the same trade as you. How come I didn't get what I wanted? Because you didn't aim for the PD array that was the most immediate price action. Now you get to collect the next one. And you slam this one up against this one here. If it comes back and takes you out, then you got 100% of your trade or 90% of your trade taken out there. And 10% for the extra bonus. And watch this now, because if this turns into a fair value gap above a swing, what do we have now? We have a reversal back into this one. So these two become important. That's how you have to kind of watch price constantly. Oh, I'm above here. Oh, I've got a fair value gap potentially starting here. This needs to come down, grab this, then continue up. We don't want to see that happening. If you've left 10% on for yourself, you're paying yourself again, portion out. I don't know how much you've got in here. If you've only got one lot on, then you trail it up because you only got one lot. If you want to take it out there, take it out there. Move to the sidelines. But if you're trailing it up, then you're using this as your pivot point now. So your stop loss that was here is now to here because there's your fail safe. If it drops below, it trades back to it. You're out because now we're going in the opposite direction. We've got a swing point. That's not an inverse because I didn't look. Julian, that's not an inverse because it didn't take out the low, right? It's like low probability. This is the inverse. This took the low out right there. You see that? Took the low out, so it becomes the inverse because it's right there. Are you looking at this is not valuable because it didn't take this low out? No, 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 no. That one is sitting inside of the swings that it took out. And it runs back, comes into it, and now you get higher prices. That's the inverse right there. Because it took that low, it took that low. What makes you nervous now is if that trades back through that comes up, then it's a continuation. This was just a optimal trade entry back to a breaker. Now you're inside this bigger range and you're above all this mess here. You start going, ooh, look at this up here. That looks nice. That order block looks good. And oh, let's pull this guy all the way out here again. Do we get yet another opportunity to get short right there? If we go through it, come back on top of it, we're going higher. Otherwise, we come back to it, find one more opportunity to get short, and you play inside a new range. Just missed it. That's okay. That's okay. We got lots of them out there, Davey boy. We got a lot out there. They happen all the time. Now, do you guys feel your stress lifting? Do you feel the more you begin to understand this, the more the weight of probability falls off of you and the more of the calmness of certainty tends to settle on you? Now, there's no guarantee for this stuff. Obviously, you can see you really have to be on the ball in a 1 minute chart. See, we've took out those highs, Did you pay yourself at those highs? Did you pay yourself at that order block? If you kept reaching for this, you overshot your PD raise. Make a journal entry about that, because that's telling me you want greed instead of going, I'm just trading a logical PD array. I'll move out and I'll wait for the next setup. You get as flat as you can, trade binary, trade array. What range am I in? What arrays am I aiming for? Now I look for return to old highs, look for discount array down here. Like this is the breaker tip right here. There's your breaker. See, tap it. Come back through discount array. Pull your range fib tool. 50%. Just tap below it. That's all we needed. Continue to the upside. It does it all the time, folks. Goes from premium to discount. Look at the range you're in. I don't know how many times, thousands of times since I started doing this 7 months ago. And look where we are now. The clarity for me has grown exponentially since I started doing this live with you guys. So it's really clicking for me now. We also got an SMT, but you don't use that. But I saw that. I don't use SMT. But, you know, if you saw it and it works for you, buddy, I'm happy. I still have not figured out SMT. I feel bad because I feel like I should know it. But as you can see, it doesn't change how I treat a 1 minute chart. I've simplified it. I call this the firefighter approach. I'm not going to say dumbed it down, but I've made it much more simple for me to understand. You put the wet stuff on the red stuff. That's pretty much what firefighting is. If it's hot, you get it wet. Oh, that doesn't sound good. Sounds like a t-shirt. If you find it hot, leave it wet. Dave, it just might happen again. It just might, Dave. We just might get our setup again. Hi, Darren. Been checking in on your stream for a few days. Really good content. Thanks. May you please explain how you define a swing point? A swing point is any 3 candles that creates a low or a high. Swing point, swing point, swing point. And then I look for, once I find a swing point, I look for the previous swing point behind it, and then I look at the range, I look at the premium and discount arrays that are sitting inside those things. What's at equilibrium? I say, if this is just a basic order block, how important is it? What's the strength? I do a quick analysis on the strength of each one of those arrays, and I say, what's the probability? Have we taken out an old high? In order for me to get further continuation, I need this candle to hold price. I need it to come back to it, give me some support, and continue to the upside. The moment a new candle forms inside this new range that I'm creating, I wait for a swing point to form, and I go, am I going to extend past this range, deeper into this range, or am I going to start extending up above this candle here to push higher? I've come back into a optimum trade entry, or below the 50%. I'm going to get through this mean candle here now, because now this little range we've got starting here, I want to see it start to grow higher. So now I look at this and I say, what's the next price leg higher? So there's multiple ways I will analyze a swing point, and what was a premium and discount array inside the range that I'm in. Where would I put a stop loss? Where would be a logical place for me to gain support? This becomes inversion. It's a discount array inside a breaker. So what do we have? A fair value gap with a breaker. What did Michael say when you get a fair value gap inside a breaker? It's like a really good support area. So I go, great, I want support on that to go higher. So that's how I define swing points. Those swing points are always my new range. And then I pretend to be the algorithm, and I say, what thing can I run for in here? What premium rate can I have to go lower or higher? So sometimes you'll hear me say, I'm stuck between this candle and this candle. Because I am. I'm pretending like I'm the algo. I'm stuck in here, between here and here. How am I going to get out of here? I need to extend my range here, or I need to blast through this. What's my overall bias? I want to reach for higher PD arrays. What other range am I in? I'm in a discount array. I'm in a range here. So I'm in a premium of a discount array. Do you understand what I'm saying? Pull your fib tool up here. You really got to understand your ranges. See, I'm in a premium of a discount array or discount zone. So I would go equilibrium. Premium, discount. Inside that range, I am in premium, discount. Premium of the discount, and then I'm in the discount of the discount. Then I'm in the premium or the discount of the premium. So I'm constantly moving inside from one array to the next array. Premium in a discount array, because remember when Michael was talking about fractals, everything you see here happens on a fractal basis. So if that's the midpoint, or here's an easy way of looking at it. If I do this, you'll see it a lot more clear when I go boop, and I hit that in there, and I go, here's the premium, here's the discount inside a discount array. So I'm in a discount. I want to go to the premium portion of that discount array, just run above here, collect some liquidity, run back down into the discount array, play around in there. Then I want to get back up into the premium of the discount. Then I want to get back from the premium back into the discount. Premium, discount, inside the discount array. Then I want to extend it. So now I got to extend. I got to get out of here. So I'm going to run back up above that into the premium array, use my premium of my discount array to go higher. Consolidation, CAM Model 2 entry right there. I just see so many different setups, so many different ways to interpret the charts. But that's what I constantly do. And I pretend I'm the algorithm, and I say, where would I go next? What array have I got to reach for? What's my next data point? So, Dewan, I hope that helps you out. Julian, could you point at the breaker out? Thank you. What breaker? Oh, this breaker right here. It's the last down close candle before a run above old highs. See that? It's a steady run. There is no bear candle in here anyway. So that's the last down close candle on a swing that takes out old highs. The next swing point. Now, if this candle here were to run, we get candles going all the way down without creating swing points in them, they just kept coming all the way down and took out this low, that would be a breaker. If not, it becomes mitigation. Mitigation is a low order candle, a medium order candle. When you come back through it, you actually drive through it, and in continuation on the upside, you pull your price leg to the upside, and we're looking for a premium array. So I would put my little carrot up here as my next objective. Julian saying, or Muhammad saying, I can teach you if you like. SMTs are fun. Yeah, I have the ICT index. We use ICT index. If I want to understand, no offense to you, Muhammad, and I really appreciate you offering, I just go into, come into the Telegram and show me in there. You call an order block as a breaker? Which one are you talking about? JPT. An order block is a breaker if it's the last down close candle before a run above an old high. It's a breaker. You come back, you find support at the breaker, and you start pushing through. You're inside this range. If you don't believe me, go to the ICT index and he will explain to you what a breaker is. And I know I'm not trying to be condescending, but I've had this discussion with other people before who say that's not a breaker, that's an order block. It is a breaker. If you run above, if it's the last down close candle that starts a run that forces us to break an old high, it's a breaker. if we start a run down and it does not break an old low, it's a mitigation block. Yeah, it's an order block, but it gets a different name once it accomplishes a goal. If it runs above an old high, little Mr. Order block here turns into a serious strength senior array, senior candle, because it's a breaker. You find a level of support till it runs back to your next array. So you expect it now to be a lot stronger than a mitigation block. And if you don't, well, then that tells you something right here. We have a body that breaks down below it, comes back up inside it. I expect this to provide a level of support and take out these lows now, because we have a swing above, we have an inversion, get below it. This is where it starts to change for me. So this carrot here starts to move bearishly. That's why I mean that it's a breaker. 12:50 p.m. candle is a propulsion block. This one right here. It is a propulsion candle right here. Right here it's a propulsion candle, but it turns into a breaker the moment you break that high. It becomes the new breaker. You're right. Absolutely, it's a propulsion candle. But that propulsion candle can turn into a breaker the moment we break an old high. So we may be splitting hairs over how we're defining it, but you got to remember it becomes something more than just a propulsion candle. If we just came back, if we were here and it came back, tagged it, and then left, I'd say, yeah, that's great. But as soon as we break an old high, that becomes more than just a propulsion candle now. That becomes a senior array, a breaker. And we may be splitting hairs over how I define it, but that's how I define it. If you can find a definition in Michael's ICT information, please send it to me, and I will correct that just so that everybody's aware of it. And I'll need to understand it, but that's how I interpret it. And so far it's working for me. SMTs are fun. Julian laughed my ass off. Bitcoin is breaking out. So you're looking at this thing in quarters. Yeah, of course I look at a range I'm in. I look at it as in quarters. Depends on what range I'm in. If I see it busting around in here like this, I think, okay, I'm in the discount inside I'm in the discount portion of this larger range here, and I'm just playing a premium discount inside this discount array. So I want to see it start breaking out of here, coming back in, finding some support at this to really start getting up into a premium rate, because we've been working the discount like crazy. So we're either going to roll up here, just get a little bit of premium and start booking it through and start blowing through these candles. Then that becomes, see how at this level of support, so now I'm bearish. We've traded below it. You come back up into it right here. Short. Now I'm short. Now you've got this guy here. You got to break through this breaker. You got to get through that, get below it, get through this. Now you're really bearish. Otherwise, we're back into the discount of the discount array inside the larger range. So here's where we can get bounced around off this breaker because it's such a strong candle. You could just get popped above this and you go, now I'm bullish again. Then it comes below it. You go, now I'm bearish again. Now I'm bullish again. And then you just get back into this candle here and this candle here, because that's where you are right now. That candle and that candle. That's been validated. And this one's been validated. See how it's come back and tapped it? All in one candle. That came down, tapped the mean threshold. Now it's got to bust out. Go up higher to the mean threshold here, this little inversion. Come on up. And then it's got to come ripping all the way back down again. We have this imbalance here, this imbalance here. That's part of a premium discount array. This is a premium array that supports price inside a little imbalance sitting in there. You see that? Watch right there. Now we've hit the body of it. See how we snap off of that? In that 1 minute candle, we're going back to 1 second discount arrays. Are we going to push higher? Or is that all we needed inside this? See, that's what I mean. Your mind has got to be super fast to catch this. See, it just ran up above the 50% inside that little imbalance, and now I'm running back through here. I want to either blast through here into discounter or your rejection block again. Push, 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 go hard. All I need to do is just come back into a premium above 50%, and I'm driving through. You got to get through here, continue to support this as the telltale sign that we're going lower. You will see that get eaten right through here now. Come on down. Now we're down. We're definitely bearish. See? And we found that off the inversion. You pay yourself here. Did you pay yourself there? Did you get on it? Did you trust that that was an inversion? And that propulsion candle failed now. Your breaker failed. So it's now a senior array that's given up, which tells you definitely we got some more strength to the downside. We run into here. Rejection, pay yourself. Ooh, delicious. Did you see that? You come all the way back to, look at that, right on the money. We filled that sucker up right there. This whole inversion to go long, you've come back. Now you get your perfect little entry that we talked about. If you could have caught that, you'd be going long, right? Look at this. This is a breaker. Do you want to pay yourself at a breaker? Because it's a breaker. You've now run below it. It's a breaker going higher. This is that breaker entry to go short now. So if you're long here, take your money out right there at that PD array. If this turns into an inversion, this thing repeating itself over here after taking out this, you got to be watching this. You want to see it come straight through and tap that. Completely eliminate that possibility that the price is going to reverse at that point. Unless this becomes reprice, rebalance. There's a big wick down. Watch this inversion again. See how you pay yourself here? Move your stop loss right up to break even now. And then you can run, again, whatever your method is for managing your trade. Whether you're just pulling your fib tool back in from that range there to there. And this is where you'd be pulling your fib from here. If you're using the fib method, which I showed you on the weekend. If that's your fib method, you're doing retracement. So if you got in here, you pull your fib tool, 50%, pay yourself, move to break even. 62, slam up against 50. Now you're definitely in profit. You hit 70, move it up to 62. If it comes back and takes you out, who cares? Collect your money, move to the sidelines, have a laugh. Oh, now move up to 70%. Move your stop loss to here. Oh, no, move it to 75. You hit 80. Move it up to here. You just hit 88. Woohoo! You're trailing it up behind, using your fib tool as a means to get out. I think it came back and would have tagged you out there. And you're done. That little run for the perfect entry you got right there, that was your drawdown. Literally half a handle. Because you're trading, remember I was telling you about trading from one to the other, premium to discount, premium like array to like array, reversal to reversal. It's all there, man. All inside that consolidated crap. It's all in there. It's all in there. Do you think Michael can long short this back and forth? Michael could do this with his eyes closed. If I can do this, off of what he taught me, what do you think he could do? You don't even need to ask that question. Michael make me look like a infant bouncing around in this shit. Can you clarify rejection blocks more in detail, please? Okay, so when you have a swing point, you take the candle with the highest body inside that swing point. That from that candle right there, it's high in the swing point that you see here. The candle with the highest body close or open, depending on where, whatever the body highest piece is, from that point up, from here to there is the rejection block. Anywhere inside there is rejection block. Now, that has its own level of arrays inside it, but for now, that's the rejection block. So you take that rejection block and you say, what is the rejection block inside this swing? So when it comes down and blows through the rejection block and actually takes the low out, you go, ooh, sweet. Move it up here. This is my rejection block right here. That low right there this low, that whole wick right there is the rejection block. None of these guys make any difference because their wicks don't even come down to it. That is the rejection block, that wick right there. That's the rejection block. Swing point, this is a rejection block. If I'm just looking at a range that I'm in, remember, I'm just inside a range. You could say it's the highest thing, then yeah, well, if that's the range I'm now moving back into, then I'm looking for that one. Then I'm looking for this one. So you'll see me say, well, if that's the highest point, why are you picking this guy down here? Well, because if that's the range I'm in, that's the rate I'm trading in from the swing points, and I'm trading back to it, then that's a point I want to get out at. See how it just come out at that point there? If I'm trading from one to the other, that's the point I want to get out. So now all of a sudden we break through that high. You go, great. Now I have to extend my range to this one here and there. What order block sitting in here is, well, this guy's in the upper part of this new range. He's my support mechanism. There's that imbalance sitting there. There's also the the mean threshold of that last up close candle before run below low, makes it a breaker. We trade into it, right into the rejection block, into the mean threshold, pop down, and then blast right through it, rip right through the top of it. Well, now we're definitely bullish now, because now we've broken through a breaker. You take the breaker now, we trade above it and trade back into it. Now you find some support to go higher. Here's another one. This one's mitigation though, because we do not break an old low. Because this one here, you got a swing point here, swing point here, swing point here. All these ones are potential breakers because we have a reversal back up above it. So this is mitigation because it doesn't take out an old low. Some people might say it's a parent breaker for a bigger order, a run where you kind of ignore all this and it runs that old low. So I like it as a level of support. Michael's pure definition of a breaker is about swing points, taking out previous swing points, breaking them to the upside or breaking them to the downside. So that's what I mean by rejection blocks, Terry. Ironically, I have a photo of Patrick Wheeling under your... yeah, Patrick Wheeling. He's a character. He gets lots of people. I think he just likes to poke fun at ICT just to get people to come into his channel and trash what he's saying. He loves the attention. I'm not going to feed it. I initially got in there and go, you're nuts. You're nuts. You have no idea. But he's just trying to egg people on, get clickbait. I'm not gonna click. PDRA hierarchy understanding is primal for ICT to work. It is pivotal. That's all you hear me talking about is array. I just array trade. Take me up, Scotty. Beam me up, Scotty. You don't consider new day opening gaps because the candle on the 15-minute went the consequent encroachment? Yeah, you could take that into consideration. My question to you then, if I did take into consideration, would it have changed how I traded this trade? And if you say no, then this is what it's like when you're on the array, when you're on the horse and you're running and you're seeing it changing directions. Then you realize you're not on a bucking bronco anymore. You're on a horse that likes to run around. And you get to sit on it and enjoy the ride versus trying to wrestle it. So ask yourself, Julian, whether the new day opening gap made any difference to this chart entering or exiting based on what you've been shown here. If it does, let me know, because I'm always eager to learn something new. Dayberry, man, look at that return to the reversal. It's all about definition. It is truly about definition. And you got to go to the ICT index to get the true definition of what he calls it, not what Darren calls it, what he calls it. And if it's different than what I call it, let me know, because I thought I catch exactly what he's saying. I went to the actual video where he explains it, and I was like, okay, yeah, because somebody had me second guessing myself as to what a breaker was, and I was like, no, that is a breaker. It's what he says. And then I went in And literally it zoomed in right on the point where he was calling a breaker, when it was a breaker and when it wasn't. And I go, okay, good. I am right. So unless you find another definition that proves it wrong, let me know. All I know is whatever definition I've given it, they are certainly providing the strength that I expect them to provide. So an old PD array becomes a boss if its high or low is taken out. Yeah. That little basic PD array right here, when it was here, it was just a plain old order block. Plain old order block. Okay, it's a swing point. Plain old order block. It's still a plain old order block. It is now a breaker. The moment you break this high, it becomes a breaker. It now has become a senior boss candle. It's a level of support. Okay, it's a boss candle. This becomes a boss candle when you break an old high. It's a boss. This little guy right here, a plain old order block here, becomes the boss when it breaks this high. Swing point. It's literally almost the same candle that it is occupying. That one, that one, that one, that one, those are all swing points. It breaks the swing point. It's a breaker. Comes back down inside. Fair value, inversion, senior array. It's a senior array. The moment you break through it, it's a fair value gap to there. The moment it closes above it, it becomes a senior array. It gets moved to boss status or lynch or henchman status if you want, because when it comes back to it, it provides a level of support, unlike a fair value gap. See how fair value gaps are weaker? You can rip through them, you can find support on them, but the moment you rip through them and you come back to them, now all of a sudden that little fair value gap, which has now become inversion, now becomes a boss. And hopefully you see that. It's not, I'm not form fitting this stuff. Go back over it and over and over it, you'll see. And if I'm wrong, let me know. I'm totally keen to change my approach. Like I say, I will reserve the right to change my mind if I'm wrong. See how this entry was a perfect entry here, down here for the swing? It came all the way back to give you that perfect entry. If you scaled yourself out accordingly, depending on how much you put in on that, you scaled yourself out. What a beautiful run up, all the way up into a senior range, discount array, premium array, like array to like array. That's where you're right in right now. So if you just trade like array to like array as your objective, and again, it's a trading style, you just maximized perfect entry, which is 815 or 515, 8545. That's 30 handles right there. That's exactly what I asked myself, but still asked. Yep, no worries, buddy. You can ask anything you want. Did you saw the 1 p.m. propulsion block? Do I see the 1 p.m. propulsion block? 1 p.m. propulsion. 1 p.m. propulsion block. This 1 p.m.? This little guy right here? No. I don't see that as a propulsion block. Oh, 104, sorry. 104. This as a propulsion block? No, I don't. I look at that as a breaker. Last up close candle before a run below these old lows. That is a breaker. Body breaks above it right here, and we return into it right here. Support. This is another one of those. It's another trading style. Remember when Michael talks about 81 different types of entries? There's another one. Key off the breaker. That's a breaker. Last up close candle. You don't always go back up here. There's a swing point. Last up close candle before a run below this low. It takes it out. That's a breaker. For me, that's a breaker. It's a major senior candle, and it becomes a senior candle, especially when you get through it. Now it becomes a support to go long. We've got it right there. If you didn't take this entry here and you go, oh, if that breaker breaks to the upside, I'm getting on that for further upside for a run back into a premium portion of the range we've been looking for. We talked about premium and discount inside the discount array, back and forth, back and forth. Then all of a sudden we said, well, we have to start getting back up here. And what did it do? It keyed off of our inversion, and off she went. And now we're back in that range. Move to the sidelines. I don't know how many opportunities you've had inside premium and discount, inside a discount array, to make money inside here and to get that for the long. Many, many, many opportunities. That looks like high resistance, but it's not. If you watch every candle, and if you can stay on the horse inside this stuff, you guys are going to be way, way, way better traders in the end. Because you know you're watching every candle, where it forms, where it's going. And it has to bust out. It has to get out of here. And if it doesn't, then you have to ask yourself, why didn't it break out of there? What did I miss? And you'll get better and better at zeroing in on it. And before you know it, you're riding a fast horse. You're not being bucked around. You're staying on a horse for some delicious rides. Tony Soprano, boss. That's right. That's a Tony Soprano candle. Mats, Matilio. I'm watching ICT 2016, 2022 mentorships. Yeah. Make a ton of notes, man. I got binders behind me of notes. Where's my binders? I call myself a liar now because I don't have my binders here. Where's my binder? I have my big binder here. Where's my binder? Here's one binder of notes. Just so you know I'm not bullshitting you. When I make notes, I make notes. This is my January of 2020. You guys can see this or not. Okay, I make pictures. I make a printout of it, right? And then, like, I make tons of these things. I make a printout, I type it. I type every freaking picture out. If Michael's got notes, I will make freaking page after page. That's a whole hundreds of pages inside that binder. That's one binder of many I've got, and that's just individual pages of. And I do double-sided ones. Like there's one on that side, there's one on that side. I double-side them because I don't like wrecking the environment, so I like to try and make as many double-sided pages as I can. So it's all that double. And I still make notes. If I see Michael saying something, I will go onto his channel. I will screen capture something he said. I will go back and I will type in word for word what he's saying, so that I get it word for word from the codifier himself, the guy who actually said it. I don't put it in my own words. I go right exactly what he said, and I draw pictures, lines in there, and I print that off and I stick it in my binder, and I go back and I study it later. I make these things, cue cards. I got cue cards, and I study all the time. I have my chart on one side. This is what the consolidation pattern, or a weekly, what's this one? This is a Monday, Tuesday, Wednesday, Thursday, Friday. It talks about a scenario 3, the premium market, bearish order block, and how it will dip down, come back up, take out a senior array and go down to the discount. So I make cue cards that I studied back in the day. I still have these. They sit right there. I make cue cards that when I'm out and about and I'm in that little dead zone that you go into the store, you know, when your wife is out there doing her clothes shopping and the guys sit in that little dead zone just out in front of the changing room where all the guys sit in purgatory waiting for them to come out and show you their clothes. You take your little flashcards and you flash them, and then she pops out. You go, oh, yeah, lovely. That looks beautiful. You look lovely in that. Oh, I love it. You should buy that. She goes back inside and you pull out your cards and you study them again. Is that nuts? I know you guys are doing that. Come on. I know you guys are doing that. So, cue cards. Make notes. And I mean, make a ton of notes. Get really good at it. Get up. Move around. Study your notes. When you walk around, helps your brain. Don't sit still and study. Move around. Constantly keep moving. keeping some blood flow, oxygen, sugar going to your brain helps you study stuff better. And when you move, you remember things better when you move. And you'll remember places that you studied, things, all that kind of stuff. Anyway, I could go on for hours talking about that. So good for you, Mats. Keep studying all his stuff. Make a ton of notes. Come in here and we'll show you how to apply it. Julian, crazy. There's a model between rejection blocks. Is there a model between rejection blocks? Ah, well, that's trading rejection block to rejection block. That's PD array to PD array, like array to like array. So watch the rejection block once it gets taken. Then say to yourself, if I was in a range, what would be a rejection block to rejection block inside that range? So could I say I'm aiming for here? Sure. But remember, there's the discount array here. You want to see that get underneath that before you reach your objective. Then you go like array to like array inside the range. So that is a trading, that could be a trading model for you if it's something you wanted to develop, Terry. Man, you're build different for real. Man, you're built different for real. You know what? If you knew my past and you knew what I thought I was going to be my entire life and how I learned how to learn. When I was in acting at university, man, I remember I used to be like, they called me the golden boy at school. I don't know why. But they said, the teacher said, you know, there's always somebody that comes through that's kind of like a natural for this stuff. I was like, oh, well, thanks. That's really nice. And then I remember doing a cold read one day. And I was terrified. And I'm in my 20s, don't forget. And I had to cold read. And I said, just give me a few minutes. Let me just read my parts first. And they're like, no, that's why they call it a cold read. You have to read it cold and not know it. And I couldn't. I was terrified because I was traumatized as a child reading. And I would be like, and see, spot, run. And I'd trip over myself. I was absolutely terrified. And you could see all the kids in class like, you're not the golden boy anymore. You're not the golden boy now, are you? Look at you. You're just shitting yourself over there. And that's why cold reading was a terrible thing for me to do, because you got all these people staring at you like they did when I was a kid. Now, I don't care. I'll read. I'll fumble over my words. I don't care if you don't like how I read. I don't care. It's something it's taken me a long time to get over, that self-talk. So I had to learn how to learn. I studied how to learn. And there's a video that talks about, I won't get into it again, but there's a video I had talk all about the different types of learning styles, all the different types of 7 intelligences that we all have, and which one are you strongest in, and how to learn best by that particular learning style that you're good at. I was good at martial arts. I did a lot of body physical stuff. So I was into those kind of sports. And then when I realized that I wasn't just a dumb jock, that I could actually be more than that. I started obsessing over learning. And that's why I appreciate people like Terry, who are 77 years old, that are out there plugging away still after all these years of trading. He was back in the day when they take their trades and they tie it to a pigeon and they'd send it up there, and you're like, no, we're selling, go that way. You know, Terry was back in the day when they traded by pigeon, man. And he's still learning. I love you, Terry. He's still learning. There's a model between direct blocks. Man, you're different for real. Don't tell them all our secrets. Where are our wives in here? There are wives. Yeah, I can just see Kitty saying, is that really what you do when I'm in the changing room? I get myself, my buddy Christian in trouble there now. Kitty's like, oh yeah, I'm in there. I know what they're talking about. I know what you men thinking. You have to put in a few hours today. Thank you. Yes. Okay, I think it's going to be it for me. I've enjoyed this little chat this morning. I think I'm going to go get some exercise. I got to get up and move around. I can't sit here. My back, it gets really sore after a while. So look for, there's your rejection block right there. You hit that, now you got your low. Look for the discount array. See this range you're in right now? Here's a discount array that we want to see. Give me some support below that. I want to see that pop through that, come back, and that becomes like an inversion point, right? It's a crappy one. It's not a really solid one. We want to see these clean ones like this. See how it runs up? It's tight. There's like 3 or 4 candles that gives us our dip below, get our back, and then we can start running back into our range again where we can start really collecting money. These kind of crappy ones, not a solid payout. So look for something that's clean and concise like this. 1, 2, 3 candles, we're up through them, but we'll come back into them. Now you're blasting through and you're catching some run. Don't try to form fit your and buy every trade that you think is a reversal. Buy the ones you know are reversals, that you feel clean, get a good clean entry on. Wait, if you didn't catch this one, I was sitting down here originally going, this would be the perfect entry if you could catch it. Well, there it is right there, and you just caught a massive run up after it took out all these highs yet. So for me, I'd be trading between here and this reversal. And when it finally went through it here, you go, ooh, it broke the upside. What does that tell me? It broke the upside. It's got more objectives. It's like this fail-safe. Look right there. It broke the upside. It comes back, gives you one opportunity to get back on again because I went, oh, I got out right there. Oh, no, it gives me one more opportunity to keep going. Woohoo, away I go. Actually, I'll give you another one. And I'll give you 2 more chances to get on, governor. Come on then. Off you go. And off for the run you go. So if you watch it carefully, you can go, oh, I just wanted to come into here. It trades in there. Oh, it traded through it. Great. If it comes back to it, I'll get back on again. Go long. Put my stop loss just setting below here, like I would if that was my reverse signal. Yeah, anyway. They make sense. They make sense to me anyway. They'll make sense to you in time. That's it for me, my friends. No, she's not listening right now. We're all good. Christian, you got to give us the signal when Kitty's listening. We won't give away all our bonding secrets, our male bonding secrets. That's awesome. Anyway, I'm out of here. I love you guys. It was tons of fun. Thanks for all the awesome questions. Thanks for all you new people that are popping in. And thank you for everything. You guys, I'm here. I love sharing this stuff with you folks. And I love that you're keen, you're eager to learn. We got more people loading in on our Telegram channel. You're welcome to join us there if you're a kind person that want to help out people and be part of a good community. Pop in there. If you're looking for just signals, stick around in here, get your signals here. Don't go in there and start hassling people because, we don't want that stuff. We want to share. We want to learn. Okay. So until tomorrow, my friends, this is my last couple of days. I will be here till Friday. Then I'm taking a week break. And I expect to come back and you guys tell me, we don't need you anymore. We don't need you. We got this stuff dialed. We know exactly what we're looking for now. Because in April, we're going to clean up. April is going to be a massive, massive fun day. A month. We're going to have so much fun in April because I anticipate April giving us a big swing in that quarter. So stick around in April. We're going to catch some big, big runs. If you got yourself some really nice new fresh demo accounts that you want to start growing your demo accounts, stick around. Let's grow our demo accounts together. I might do 1 year, maybe next year, and say, everybody get yourself a demo account get yourself a demo account, and we're going to see if we can trade it up to $1 million by the end of the year. And add or subtract your zero relative to $100. Or $10,000 or something like that. Let's see if we can run it up. And we'll do it all together. But anyway, that's I got ideas, some things I want to do in the future. So until then, peace out, my friends. Thanks, Derek, for all your help. And we'll see you guys tomorrow.